Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everybody. Live in the Bloomberg Interactive Brokers studio, streaming on YouTube. We are on Bloomberg Quick Take, and we made it. It is Friday.
Wait, you got tickets to Taylor Swift?
No, which my daughter's like, hey, Mom, I thought we were supposed to get these tickets.
Okay, I thought that's what you meant by we made it.
No. But so did, there's to be continued.
Yeah, we're gonna
talk
dig
about
into that a little bit.
We're going to unpack that one. It is Friday, November 18th. We're on track for a down week in stocks after last week's supercharged rally. So is it fears over higher interest rates still coming? The Fed speakers all remind us. Concerns over recession or both? We're going to kind of get the Vulcan mind meld in just a moment.
Ooh, looking forward to that. Leaning in, falling in a big time,
Yeah.
to crypto today. We're going to be talking all about what's going on with the great gut check on past comments by SBF about FTX, and also some of the red flags that a lot of people miss. But in hindsight, duh.
I know, indeed. Annie Massa, great story, and the team putting that one out. We're going to talk about blockchain and sports engagement and monetization, the latest episode of Tim and Katie's Crypto IRL.
Yeah, we talk a little bit about crime in crypto, so looking forward to that one. Yeah.
No, really?
Yeah, we do.
Okay. We're also going to talk about ultimatums and vulnerabilities. We're talking Elon and Twitter. And then we've got the CEO of CarParts.com. We've got to talk about the car market.
All of that to come. We begin, though, with a check on the trading day. Here's Charlie Pellet.
Thank you very much, Tim. Looking at a mixed Friday here. We made it indeed. We've got the Dow higher, S&P, NASDAQ. They're both on the minus side. S&P little change, down by 1 point. But first, developing story. Twitter owner Elon Musk has sent out an email to all of the social media platform software engineers requesting that they report to the company's San Francisco headquarters for a meeting at 2 p.m. local time today, urging employees to fly to the Bay Area to be present in person. Only those who cannot physically get to San Francisco or who have family emergencies are excused. This according to Musk in the email, which was viewed by Bloomberg. Again, we've got stocks trading little change right now, at least on the S&P. Oil futures are falling a day after Federal Reserve policymakers disabused optimistic investors of the notion that interest rates will abate soon. The 10-year yield 3.81%, the 2-year 4.50%. Again, the S&P up 0.5 point, NASDAQ down 49, down 0.5%. The Dow up 64, up by 0.2%. Spot gold down 0.6%, 17.49 the ounce, and West Texas Intermediate crude now down 3.1%, 79.12 a barrel on WTI. Well, as for the market backdrop, given what's going on with the Federal Reserve, Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
Anytime you see an inflection point in the data, you're seeing this sort of rally in risky assets. You're seeing financial conditions start to ease. We're seeing mortgage rates come off quite meaningfully in the last week or so. So under these circumstances, you tend to see risk-taking coming back into the markets.
The U.S. Justice Department is investigating Ticketmaster's parent company, Live Nation. This according to the New York Times, citing sources familiar with the matter. And last check on Live Nation, that stock is declining. Live Nation shares right now down by 7.2%. Recapping, the S&P now higher by 1 point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, so much for a slow Friday because there's a lot going on. All right, let's get to the market drivers report. Let's set the Business Week agenda on this Friday. And in the house, in our Interactive Brokers studio, Bloomberg Markets correspondent Kriti Gupta to my right. To my left is Bloomberg News Markets reporter Abigail Doolittle. I have to say, it does feel like, Kriti, kind of a mellow day.
It does.
Here we go.
It does and it does not. So look, we started off the stock market open. I want to say over 1% gains at the open. To me, I think the game changer here isn't what you're seeing in the equity market or even the bond market. It's in the commodities market. And I think the rest of the asset classes are kind of taking their cue from that. Now, a really big question that actually Alex Steele has asked me over and over again is, what is the tipping point between inflation concerns and growth concerns? And it kind of feels like today...
Does anybody really know?
What do you mean by that?
So this idea here that inflation that keeps rising, driven by perhaps higher oil prices, higher food prices, the sticky stuff that's really going to show up into average Americans' bottom line, their budgets, their incomes, That's the stuff that you're really going to see weigh on the economy, as opposed to inflation decelerating, but then a recession causing growth to really pull back in the economy, which then feeds back into lower oil prices, lower food prices, et cetera, at least on the contract level, as opposed to
This is
grocery
tricky,
stores.
though. This is why the Fed is in a tough spot. We talk about hopefully, coming out with a soft landing, but this is not an exact science.
Yeah, and there's two different trades, because if you believe inflation is strong and it's going to keep accelerating, that the peak is not in the rearview mirror, then commodities are going to move higher and risk is going to move lower. The flip side of that is if you're worried about growth, commodities come down. And right now, you're seeing Brent crude really take a pretty big tumble down to $87 a barrel there on a handle. NYMEX crude dropping below $80 to a 79 handle. And the reason I point this out and so important is because when you have risk assets rallying together, it's kind of seen as a healthy gauge. The stock market in line with the commodity market. We haven't seen that with the market trading with inflation. The idea here being the higher inflation is going to eat into S&P 500 profits. Now you're kind of seeing,
logical trade.
Yeah, now you're kind of seeing a reversion. Maybe Abby can speak to this a little bit, of oil and stocks maybe moving together. Also, perhaps people cashing out ahead of the weekend.
Cue Abigail.
I don't know. I think that sometimes there's maybe a little bit too much analysis that goes into things. And I guess the way that I think about it in terms of oil traditionally is as a risk asset. And so to the point that Creedy and Alex were talking about between growth and inflation, the tipping point will be if oil really breaks down, which is pretty close to doing. If that were to occur, then I think that it's going to be an all-out risk.
You mean breaking down technically?
Technically.
Yeah.
Yeah, it's almost below its recent low. And if that happens, I think that you could see a big risk asset sell-off. Now, the thing is, commodities tend to lead equities, but even by weeks or months. So if there is some sort of a collapse in commodities, which certainly hasn't happened, there's been a very orderly sell-off this year, then I would think that that would be another shot across the bow that you're going to have some difficult trading ahead for stocks.
Hey, speaking of stocks, Abigail, volume is down. I mean, we're talking like, is it already a holiday week here? 25%
It's funny,
on
I'm
the
looking
S&P
at that.
500. What's going on?
Well, it is down 25% below the 20-day moving average. And Carol, you started off asking, is there anything going on? And
I asked Carol the same question outside the studio. I was like, kind of a snooze fest.
Yeah, it's one of my reports earlier on Bloomberg Television was how the news is there's not much happening. So
okay, good.
I mean, sometimes that is news.
We gotta go home.
Yeah, we're not supposed to say that, but when when it is really the case, it's news.
But those numbers don't lie. I mean, and do we have to? I don't know. This could go to either of you about the options expiration today, right? Triple witching. Do we expect a little volatility at the end?
I don't think so, truthfully.
Okay.
I mean, looking at the volume right now, it would be sort of shocking if we saw any sort of pickup.
It feels very logical to me in that, Nick, first of all, we had an incredible, as I said, an Uber run-up in stocks last week, so a little bit of a breather. We're at the tail end of earnings. Our next Fed, right, we're getting ready for our last Fed meeting of the year, which is December 14th, so we're about a month away. Like, it's just that kind of wrap-up feel, and I feel like unless you start to see major recalculations when it comes to earnings outlooks, I feel like maybe this is the trade for a little while.
It kind of seems like that. Remember,
Or commodities start to break down dramatically.
Right, remember, Mike Wilson made this point. He said, look, you're waiting for the pivot between Federal Reserve pushing the markets and driving the markets to earnings driving the markets. And I think a lot of people expected that pivot to happen in October. And it didn't, because we're still kind of on the Fed's whim here. No surprise. The earnings point, I mean, you're seeing on an individual basis some really punishing and positive reactions in that regard as well, especially for those companies that boost their full year guidance. Those are really getting rewarded, 7-8% moves. The ones that cut it, really getting punished to the downside. But once again, that pivot that he's talking about hasn't quite hit yet.
Yeah, I think about this week alone, TJ Maxx doing okay, Cisco doing okay,
Ross.
and then you had, right, exactly. So saving the last 15 seconds for you.
Well, you took me off guard a moment ago. It's not triple witching today. That's in December.
Oh.
So it's the third Friday of, that's why when you're saying that to me, I was like, is this a trick
Thank
question?
you for the
I'm not
correction.
sure.
Why did I for some reason thought that.
But the other thing is, on a triple witching day, you would see the huge volume on the open. There's a little bit of volume on the open But a triple witching day is a lot different than today. This is a snooze fest.
I blame those 2 helpings of lunch that you had, too.
I do.
Come on, man. So give them a break. All right, Kriti Gupta, Abigail Doolittle, thank you so much. All right, let's get to World and National News. Denise Pellegrini is on it. Hey, Denise.
They made me take 2, but we're soldiering on here. New York Congressman Hakeem Jeffries, well, he is officially seeking to replace House Speaker Nancy Pelosi as Democratic leader as she steps down. Adrienne Elrod, president of Elrod Strategies and former Biden for President Director of Surrogate Strategy and Operations, she says Jeffries is definitely on the ascendancy.
A rising star, has been a rising star in the Democratic Party for the last, I would say, decade.
And Elrod speaking there about Jeffries, the 4th-ranking House Democrat. If Jeffries' bid is successful, he'll be the first black lawmaker to lead a party in Congress. Buffalo residents hunkering down as a long-duration lake effect snow event continues to slam the Great Lakes region in western New York. Driving bans in effect. Mayor Brian Brown.
Please, if you don't have to go out, don't go out. It will help us with our snow plowing efforts throughout the city.
And the mayor telling people to just stay inside all weekend. Investigators taking a close look at Sam Bankman-Fried's haven in the Bahamas and his relationship to authorities there. Regulators for his bankrupt crypto exchange say some FTX and related assets may have been transferred to Bahamian authorities after the bankruptcy filing commenced. And new rules now in effect in New York City that aim to greatly reduce the rat population, including rat mitigation zones and requirements for rodent-resistant trash containers. And coming next year, big changes in April to the way garbage is collected. It'll cut the time that trash sits on the street. Global News, 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini with World and National News from our Bloomberg newsroom. So we talked about volume being light in terms of the trade here, and that makes maybe some sense as we get ready for a holiday week next week and get into the weekend. But I will say when it comes to news, almost every day, I think this week, when I would look at the most read on the Bloomberg, whether it was in the past 8 hours or past 1 hour, it was all about FTX and Sam Bankman-Fried. And I got to say, this includes this next story, it's a story I love and it's a must read. It is a most read on the Bloomberg. It is about what FTX's Sam Bankman-Fried said when we asked him, our Bloomberg team, asked him about some different things and the red flags that were raised over the summer. So delighted to have back with us Bloomberg News investing reporter Annie Massa. She's been all over this story. She's back in our Bloomberg Interactive Brokers studio. Love this story. Feel like it's so important, right? When we kind of are now looking back. So first of all, tell us about the story and how you guys laid it out.
So back in August, I was working with Hannah Miller and Anna Herrera here at Bloomberg, and we were just kind of talking about how something was fishy with FTX. And at the time, SBF was on this mega buying spree. He was buying up all these bankrupt companies and just throwing money left and right. And we just sort of started to the more we looked into FTX, the more we were like, where is he getting all this money? What's going on here? And what on earth is this company Alameda that's operating on the side that he also owns? And none of this was it was known that Alameda existed and was out there, but there seemed to be some pretty glaring conflicts of interest. So we thought that we could write a story about how in traditional finance, that's not really kosher. It's not really copacetic to have a market maker kind of operating under the same umbrella as an exchange. Sure enough, here we are after interviewing him about it in August, and it's all over the news.
In hindsight, I mean, this was just the tip of the iceberg, this hunch, this kind of fishiness.
That's right. So in hindsight, it was really just the tip of the iceberg, what was actually happening.
So it raises the question, Annie, about, if you're a company, if you're a venture capital firm and you go out and you're looking for investments, you have certain types of due diligence. And oftentimes what you do is you look at the makeup of the board, for example, or you look at balance sheets and you dig under the hood. Journalists don't necessarily get to do that when they're interviewing subjects unless they get access to those things. What did venture capitals miss? Why did venture capitals miss this?
I mean, one big thing venture capital missed was that the auditor, first of all, not all pieces of this empire were audited, but a piece that was audited by this was a $32 billion company, and they had an auditor that was so far from anyone's radar, that was the first auditor in the metaverse. I mean, no matter what you think of the metaverse, that should send up a red flag to you if you're a venture capital.
Even Zuckerberg would come out and say, hey, we're still working this out.
Yeah, exactly. Like, you're like,
We have the first auditor in the metaverse.
I would think he would come out.
Exactly. So that's a red flag. But then, I mean, digging a little bit deeper, the relationship between Alameda and FTX should have been a red flag, and it was out there. It was in the white paper that FTX put out about its exchange, that it has Alameda in the background. And by the way, Alameda was founded before FTX. There was a clear linkage there. So, I mean, these are all things like you'd at least at a minimum want to know, like, what kind of access does Alameda have to your exchange data, like information on your customers and what they're doing? I mean, to say nothing of like sending money from FTX to Alameda, which is outlandish.
Well, it's kind of amazing. I do love this story. Everybody should read it. Just go to Bloomberg.com. But it's interesting, like you say, on FTX's relationship with Alameda, Bankman-Fried said over the summer, as of today, there isn't that much of one there. So maybe, who knows, maybe at that point it was, I don't know.
But no, I think basically at this point we like cannot believe anything he ever said on the record or ever. But looking back on his comments, it was kind of like, it was astonishing because we asked him very specific questions about the relationship between these two firms and where he lived, for example, and like he wasn't able to answer anything.
Well, help me out with here, because going back to what Tim says, and we've been talking about this all week, that, you know, venture capitalists tend to love these crazy people, you know, that often look a little bit offbeat and are seen as geniuses and brilliant, right? And are okay with it and the quirkiness. And yet, as you guys lay out, the living arrangements for FTX and Alameda employees, like that he couldn't really answer where he lived or slept. Like, you looking back, is it just like, wait a minute, this is a simple question?
Yeah, there are pretty simple questions that I don't think people were really like asking him, or they didn't care. And to your point about how he looked and acted, I think sometimes there's a groupthink that goes on with VCs or anyone, but like you think like, oh, well, I've seen genius look like this before in, for example, like a Mark Zuckerberg, like someone who's like not like flashy, like handsome, dashing, like, you know, good, like good with his words.
And media gets into it too.
Yeah, yes,
in a big
of course, of
because we love a story.
Correct.
But I will say, Annie, to your point, I think you're spot on. Someone like Mark Zuckerberg, think about Facebook's origin story, right? A bunch of folks drop out of Harvard, they move to California, they all live together,
right?
Like they're, you know, college roommates of some sort.
You've
Go
seen it
back
work
further
before.
to Apple, right? In a garage in Cupertino, those sorts of things.
Right.
So it makes sense in hindsight, but at the time, it's not necessarily glaring.
That's true. I mean, yeah, a more charitable interpretation is like any startup begins from, you know, humble origins by definition. And I think what maybe broke down along the way is how fast, how rapidly this thing was growing, right? So it took many years for Apple to become Apple. It took many years for Amazon to become Amazon. And this crypto thing, and maybe there was no frame of reference on how fast something could grow, but things were progressing really fast. FTX started in 2019, right? And now it's as of this year, it was a $32 billion company, you know, just throwing out cash on all these various types of investments. So, I mean, that rapid growth, maybe they thought was the new normal for crypto or something that they couldn't miss. But it does kind of give you pause looking back.
Annie, looking back, and of course, you know, Monday morning quarterbacking, what would you have maybe pushed him further on, or our team should have pushed him further on, or just media in general and investors should have pushed him further on, or what would you have asked differently?
That's a really good question. I mean, I think that all journalists are thinking, so many journalists had exposure to him or gave him exposure to the world, and it's a bit of a soul-searching moment for the industry about the exposure that he got. I'm proud of the questions we asked him. I never interviewed SBF other than this interview to ask about Alameda. But of course, I wish I had figured out that he was siphoning funds, perhaps, like, or you know, even some of the like dicier stuff under the hood. Of course, you know, even looking back at what we printed, like we took certain things to be true that he said about like how the business was doing, right? We said that he said that it earned a certain amount of money. And now in the bankruptcy filings, even John Ray says, I don't know if any of the financials I have on this company, who's now in charge.
Formerly overseeing Enron.
Who formerly oversaw the liquidation of Enron and is now overseeing the same like liquidation of FTX, said, I've never seen like a situation like this. I'm not sure if I can trust the financials that I have in front of me.
So, knowing what we know now, and all the reporting that you've done and that others have done, what you've read about what Sam Bankman-Fried has said, what are some? I don't want to use the term lie because there are different things associated with lying. But I mean, what are some things that you saw that he said that were definitely not true?
I mean, definitely not true. He told us on the record that there wasn't really a relationship between FTX and Alameda. We know that that's absolutely unequivocally false. No way was that true. He talked about his living arrangements. He couldn't really answer. So it's hard to know. I mean, I don't think at all anymore that he like quickly had changed his living arrangements. Like, no way. He said, I mean, this is one of the funny ones. He said that by some measures, like they are the most regulated exchange in the world, which is hilarious. I mean, it was even hilarious then, like to suggest that this offshore exchange, crypto exchange in the Bahamas, like has any level of like, I've covered exchanges. They have a lot of rules.
And that's a feature, not a bug, of putting it in a certain place. I mean,
yes,
if you want it to be regulated, you put it in a place that gets regulated.
They moved the whole operation. They moved Alameda from California to Hong Kong and then to the Bahamas.
All right. Annie, thank you so much. Great story. Our Annie Massa of Bloomberg News. We do want to take you to the Justice Department, where the Attorney General Merrick Garland getting ready to make some announcements. And let's take you there.
As described in court filings in the District of Columbia, is the investigation into whether any person or entity unlawfully interfered with the transfer of power following the 2020 presidential election or the certification of the Electoral College vote held on or about January 6, 2021. The second is the ongoing investigation involving classified documents and other presidential records, as well as the possible obstruction of that investigation, referenced and described in court filings in a pending matter in the Southern District of Florida. I'm joined today by Deputy Attorney General Lisa Monaco, U.S. Attorney for the District of Columbia Matthew Graves, and Assistant Attorney General for the Criminal Division Kenneth Polite. Assistant Attorney General for National Security Matthew Olson could not be here. He is currently in Germany representing the department at the G7 Home Affairs and Security Ministerial. U.S. Attorney Graves has been ably leading the investigations into the events leading up to and on January 6. He and dozens of assistant U.S. attorneys and other prosecutors have taken on the monumental task of conducting over 900 prosecutions in defense of our democratic institutions. Criminal Division prosecutors, under the able leadership of Assistant Attorney General Polite, have played a significant role in those prosecutions. Assistant Attorney General Olson has been ably leading the team responsible for investigating the matter, involving classified documents and other presidential records, as well as the possible obstruction of that investigation. All of the career prosecutors assigned to these matters are conducting their work in the best traditions of the Department of Justice. I also want to recognize the efforts of the many FBI agents and other law enforcement personnel who are assigned to these matters. They are working courageously and steadfastly and are serving our nation honorably. I am grateful to them. We all are. The Department of Justice has long recognized that in certain extraordinary cases, it is in the public interest to appoint a special prosecutor to independently manage an investigation and prosecution. Based on recent developments, including the former president's announcement that he is a candidate for president in the next election, and the sitting president's stated intention to be a candidate as well, I have concluded that it is in the public interest to appoint a special counsel. Such an appointment underscores the department's commitment to both independence and accountability in particularly sensitive matters. It also allows prosecutors and agents to continue their work expeditiously and to make decisions indisputably guided only by the facts and the law. The special counsel will conduct parts of the first investigation I just mentioned. The investigation into whether any person or entity unlawfully interfered with the transfer of power following the 2020 presidential election, or with the certification of the Electoral College vote held on or about January 6. This does not include prosecutions that are currently pending in the District of Columbia or future investigations and prosecutions of individuals for offenses committed while they were physically present on the Capitol grounds on January 6. Those investigations and prosecutions will remain under the authority of the U.S. Attorney for the District of Columbia. The special counsel will also conduct the investigation involving classified documents and other presidential records, as well as the possible obstruction of that investigation. Today, I signed an order appointing Jack Smith to serve as special counsel. The order authorizes him to continue the ongoing investigation into both of the matters that I have just described and to prosecute any federal crimes that may arise from those investigations. Mr. Smith is a veteran career prosecutor. He began his prosecutorial career in 1994 as an assistant district attorney with the New York County DA's office. In 1999, he became an assistant U.S. attorney for the Eastern District of New York, where over the course of 9 years, he prosecuted matters ranging from gang murders of police officers to civil rights violations. From 2008 to 2010, he served with the International Criminal Court, where he supervised war crimes investigations. In 2010, Mr. Smith returned to the Justice Department to serve as chief of the Public Integrity Section, where he led a team of more than 30 prosecutors who handled public corruption and election crimes cases across the United States. In 2015, he agreed to serve as the first assistant U.S. attorney for the Middle District of Tennessee, later becoming the acting United States attorney. Most recently, Mr. Smith served as a chief prosecutor for the special court in The Hague, charged with investigating and adjudicating war crimes in Kosovo. Mr. Smith will begin his work as special counsel immediately and will be returning to the United States from The Hague. Throughout his career, Jack Smith has built a reputation as an impartial and determined prosecutor who leads teams with energy and focus to follow the facts wherever they lead. As special counsel, he will exercise independent prosecutorial judgment to decide whether charges should be brought. Although the special counsel will not be subject to the day-to-day supervision of any official of the department, he must comply with the regulations, procedures, and policies of the department. I will ensure that the special counsel receives the resources to conduct this work quickly and completely. Given the work to date and Mr. Smith's prosecutorial experience, I am confident that this appointment will not slow the completion of these investigations. The men and women who are pursuing these investigations are conducting themselves in accordance with the highest standards of professionalism. I could not be prouder of them. I strongly believe that the normal processes of this department can handle all investigations with integrity. And I also believe that appointing a special counsel at this time is the right thing to do. The extraordinary circumstances presented here demand it. Mr. Smith is the right choice to complete these matters in an even-handed and urgent manner. Thank you all.
All right, everybody. That, of course, was U.S. Attorney General Merrick Garland speaking from the Department of Justice. The headline from his announcement, the U.S. Justice Department appointing a special counsel to oversee criminal investigations related to former President Donald Trump now that he is making a third run for the White House in 2024. That was certainly something that was pointed out and isolated by the Attorney General. Let's get some analysis of those comments.
Yeah, let's bring in Bloomberg Sound On host Joe Matthew from the Bloomberg 99.1 studio in Washington, Washington, D.C. Joe, good to have you with us this afternoon. I think many people were pretty shocked to see Merrick Garland come out just now and hear these words come out of his mouth. Talk about your reaction and especially the timing of this just days after President Trump announced his third candidacy for president.
Yeah, it's all about timing. You know, if he hadn't jumped in, we may not have heard what we just heard, or at least not yet. But this is kind of a classic Friday news dump, right? Everyone's kind of left town already. Lawmakers were back around for a minute, but it's a ghost town today. Perfect opportunity for Merrick Garland to hit the podium here and naming Jack Smith as the special counsel. That'll be a household name. Incidentally, there was almost no one in the room for that. It was a late scheduled briefing and not a lot of reporters around even. But this is really changing the contours already of a 2024 race that has barely begun.
Hey, this is key, and I think as Bloomberg listeners or Bloomberg watchers on YouTube and Quick Take, because it's very easy for something in terms of the timing for this to happen just after the former president is announcing another run at the White House, that it could come out to seem to be very political. You're saying, though, this would have probably happened no matter what, whether or not he made another run.
Well, I'm not sure. The timing certainly has to do with that. If he hadn't made another run, it depends. They've got a lot of investigations going here. And you were already dealing with a former president of the United States, a lot of concern about whether an indictment would be appropriate. So I think, you know, the attorney general here, who's, by the way, about to be, from what we understand, there's going to be an impeachment process that could actually emerge soon when Republicans take the House. They are not fans of Merrick Garland.
You're saying an impeachment of President Biden, correct?
Of actually Merrick Garland.
Oh, of
but
Merrick
also,
Garland.
they have threatened impeachment proceedings for the president, for the attorney general, and for the secretary of Homeland Security. It's unclear that any of those will actually happen, but that's the messaging we've heard from the incoming majority here. So Merrick Garland, you know, it's an extraordinary move to go to a special counsel. It indicates the incredibly delicate situation that they're in.
Does it indicate anything about the evidence that the government has? Because, you know, Trump supporters would say for the last 6 years, Democrats have thrown everything they can at Donald Trump. And every time, even though he's been impeached twice, he's walked away unscathed.
Right, that's right. And it's really hard to answer that question because, yes, this has been, you know, he's Teflon. But January 6th really changed the picture, I think, and the document investigation at Mar-a-Lago changed the picture. They know they have goods. It's been suggested that they believe they have enough to indict now. But when you add the investigation into the mob at the Capitol, and you know, they're trying to delineate between some of these cases, get some of them sort of shielded from the rest of DOJ. That's the point of the special counsel, to take this out of the attorney general's hands and have somewhat of an outsider or an objective observer, if you will, making judgments here and continuing this investigation. But they have an enormous amount of evidence to pour through. The question is when we actually get to see it.
All right. Really appreciate you weighing in on this. The host of Bloomberg's Sound On, Joe Matthew, you can find him every day, 5 o'clock Wall Street time, right here on Bloomberg Radio. And, of course, joining us from the 99.1 studio in Washington, D.C. Do want to point out this is the first special counsel appointed under the U.S. Attorney General Merrick Garland's tenure.
All right, let's get on over to Charlie Pellet because the markets certainly haven't taken a break. Charlie, we got 90 minutes to go.
Indeed, and a little changed right now for the S&P 500 index, up less than a point. We have got the Dow up 67 points now, higher by 0.2%, while NASDAQ is lower by 56, a drop there of 0.5%. Stocks are trading mixed. Oil futures falling a day after Federal Reserve policymakers disabused optimistic investors of the notion that interest rates will abate soon. Jennifer Lee is senior economist at BMO Nesbitt Burns.
We continue to stand by our mild recession call. For now, of course, we're going to take it, and I'll quote all the different central bankers out there, especially Lagarde, on a day-to-day, meeting-by-meeting basis. But we're still looking for, you know, the downturn to hit in the first half of 2023, and then a mild rebound in the second half.
Right now, we've got the 10-year yielding 3.81%, with the 2-year 4.50%. Stocks mixed. S&P little changed, higher by a point. The Dow up 68, up 0.2. NASDAQ lower by 0.5% right now, down by 55 points. Spot gold down $11 the ounce, down 0.7% to $17.48. West Texas Intermediate crude down 1.8%, $80.18 a barrel on WTI. Justice Department lawyers say the partnership between American Airlines Group and JetBlue Airways has, quote, absolutely no justification, this in closing arguments for the agency's antitrust suit against the airlines. Airline stocks, for the most part, higher today. JetBlue is down by 1%. American Airlines up 0.2% among some of the other carriers. United, UAL up 0.3%. Delta up 0.9%, and Southwest Airlines up by 0.6%. Stocks mixed. S&P now up by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, nothing like a hardcore ultimatum to get people to get off the fence. In this case, we're talking about the Twitter fence, and we're talking about Elon Musk and what he gave Twitter employees, an ultimatum to either commit to the company's new hardcore work environment or get it out.
And also, most recently, he's saying that all of the social media platform software engineers must come to its headquarters for a meeting this afternoon, even urging employees to fly to San Francisco to be there in person. Does everyone have a private jet?
Yes, no, I don't think so.
That's the question. Kurt Wagner wrote that piece along with Maxwell Adler. And Kurt Wagner joins us now via Zoom from San Francisco. He's technology reporter for Bloomberg News. He has been all over this story. Kurt, good to have you back with us. I want to start with the fact that I can still use Twitter right now. And last night, before I went to bed, it was like Twitter was on death row, awaiting to be executed. And I wake up this morning, and there it is. It still works. What's going on?
Yeah, I mean, last night Twitter was like a very sad place. If you like the product and use it, because you're right, it felt like everyone was just the night before the world ending or something like that. But Twitter is working. Everything we are hearing and reporting is that there was a lot of concern that because there's been so many people who have left, that eventually there's going to be this, technical kind of cascade, right? That maybe one part of the service is going to have a bug and, it's going to lead to other features not working, and that eventually we're going to start to see like long outages, or it's certainly going to be hard for them to ship any new features because they're going to be just in maintenance mode this whole time. But for today, of course, it seems to still be working, and I certainly hope that's the case going forward. It does feel, though, like this is going to be something that slowly starts to happen over the next couple weeks.
I mean, not a publicly held company, so it's kind of weird now. We don't have perhaps the transparency, visibility, and right, Elon can kind of say whatever he wants, it feels like, about this company. But what are you hearing from folks who are inside the company, and for those of us who use Twitter, about kind of the reliability of this platform?
Yeah, I mean, these concerns, the ones that I just shared with you, are coming from those people, right? Like, these are people who are much smarter about the engineering and about the tech than I am, right? And they're leaving the company, and they're saying, we're not sure who's left, right? Like, hey, I was on a team that helped, keep the timeline running, and everyone on my team is gone, right? Like, those are the kinds of stories that we're starting to hear from people, right? And I think the argument from, supporters of Elon has been, well, Twitter used to be much smaller than it is now, and it was still able to operate, and that's, of course, very true. But I think it's very different to, build up to, let's say, 2,000 employees versus start at 7,000 and then rip 5,000 of those people out within a 2-week stretch, right? It just creates a lot of chaos and uncertainty. And so, this is where the concern lies, that maybe the product isn't going to be as stable as it should be.
And there's a really kind of an aside story. Was it Jaguar Land Rover to recruit fired Twitter and Facebook workers? I mean, there's companies out there saying, the
city of San Francisco
right?
is coming out and saying, hey, we've got 4,500 open positions. I would imagine, though, Kurt, that those positions don't pay what, Twitter would pay for engineers. Kurt, I don't know how everyone's supposed to go to the office today if the office is closed.
Yeah, you and me both, right? So last night there was a company-wide email that said, we're closing the offices, we're restricting badge access. And the explanation I got from some folks who received that email was the feeling was that they don't exactly know who still works at Twitter right now, because so many people, didn't accept the Musk's ask to be hardcore. And so they're sort of sifting through, like, okay, who actually still works here? So, for example, folks who are not planning to work at Twitter any longer still have access to their email. They still have access to Slack, things like that. And so thinking was they closed the office in order to sort of figure out, okay, who should still have access to this so we don't have rogue employees kind of coming in. But, then he says today, hey, everyone needs to show up on the 10th floor to have an in-person meeting. And it's like, well, which one is it? Is the office closed and badge access is revoked, or is everyone supposed to be there in person today? It's so confusing and chaotic right now, guys. And people who work at Twitter are really frustrated, as you can imagine, with everything that's been going on.
Well, you have to wonder listen, I know Elon is a smart dude, but you have to wonder, he paid $44 billion with this company, right? And it feels like the value potentially, if it was a publicly held company, would be, continuing to go to the downside. Just 20 seconds. I mean, do we have any idea of what his longer term thinking is here? Just quickly.
No. The quick answer is no. I don't. I really don't. I mean, he's talked a lot about maybe building payments into Twitter. That's about as detailed as I could probably say right now.
I'm just chuckling, Kirk, because I'm thinking about your weekend that's going to be doing a lot of work.
What weekend?
Yeah.
What weekend? Are there weekends or holidays anymore? I don't think
not,
those exist.
Not for you or Twitter employees or Elon Musk.
Elon Musk.
Or Kurt.
All right, Kurt Wagner, technology reporter, Bloomberg News via Zoom from San Francisco.
Let's get to world and national news. Denise Pellegrini standing by in our newsroom. Hey, Denise.
Hey there. There are a lot of poems out there on Twitter about Twitter. Things like there once was a site called Twitter. It started out nice but got bitter. All right. Well, anyway, let's get to what's happening at the Justice Department. The U.S. Justice Department has appointed a special counsel, John Smith, now. He will be overseeing criminal investigations related to former President Trump as the former president makes a third run for the White House in 2024. Here is AG Merrick Garland.
Is the right choice to complete these matters in an even-handed and urgent manner. Thank you all.
And Garland speaking there as Smith takes on oversight of investigations into the January 6th insurrection, including any role that Trump may have played, as well as the former president's handling of classified White House records after he left office. We're tracking it all for you here on Bloomberg Radio. New York Congressman Hakeem Jeffries officially seeking to replace House Speaker Nancy Pelosi as Democratic leader. Jeffries is the fourth-ranking House Democrat. If his bid is successful, he'll become the first black lawmaker to lead a party in Congress. President Biden expressing some hope you may find food prices coming down. He commented while meeting with business and labor leaders at the White House.
Inflation at the grocery store is coming down slightly. Prices for things like clothes and television and appliances are going down as well as we head into the holidays.
The president does say, though, that it will take time to get prices and inflation back down to normal levels. And the number of RSV cases in New York City continues to rise. There's been an 800% increase in cases of the respiratory virus in the past 2 months. Global news, 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much, Denise Pellegrini in the Bloomberg newsroom. So if you didn't notice, World Cup, it's happening.
It is. You know what's not happening?
Alcohol.
Yeah, drinking beer at the World Cup.
It is, in Qatar.
It is, but, it's these types of things that, could be decided years ahead of time.
Yeah.
Before a stadium is built or before sponsors are secured. That I think are leaving people a little kind of with whiplash, right?
Yeah, because I would say that when people are watching football, I mean, not the American football, just to put it out there.
That has beer, okay?
That has tailgating and lots of beer.
Yeah, that has lots of beer.
That's funny. But anyway, Qatar's reversal on an agreement to let Anheuser-Busch InBev sell Budweiser beer inside World Cup football stadiums, throwing a wrench into the brand's marketing plans at the last minute. You think about these big sporting events, whether it's the Super Bowl, whether the Olympics, I mean, anything, right? There's iconic brands that, rally and use those opportunities as great advertising opportunities and marketing opportunities. So this deal was lined up a while ago, and then it's like, wait, what?
Right, so it's the marketing aspect of this, and then also what it means for fans with concessions, right? The decision's likely going to result in moving concession stands serving alcohol even further away from the stadiums. The tournament is typically the world's largest sporting event, and a decade in the planning. It kicks off Sunday, the host taking on Ecuador.
Yeah, exactly. The move also highlighting misunderstandings among the world's largest brewer, the conservative Muslim country, and FIFA, the international governing body of football, over a partnership global data said was worth $72 million. And to be fair, as our reporting writes and points out, it also paints AB InBev into a corner, since the brewer is unlikely to want to start a big public spat with the secretive football body and the host nation, just as this tournament gets underway. It's the world's biggest sporting event and a global marketing bonanza, but not for them.
Okay, AB InBev may lose out on potential business in stadiums. Such sales are not the main goal of these kinds of deals. In the run-up to the World Cup, Budweiser launched a marketing campaign based on its sponsorship. So it's not just about the event, it's about the run-up too.
Yeah, I mean, it's a lot. But anyway, interesting story. Find more at Bloomberg.com. This is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Honeywell's going to pay $1.3 billion in a settlement with an asbestos trust. Honeywell says the pact is subject to approval from the court. Right now, we have got Honeywell shares. They are trading lower by 0.5%. It is a mixed day, very similar to our last update with the Dow higher, S&P higher barely. Little changed on the S&P, up by 1 point right now, while NASDAQ does remain lower by 53 points, down by about 0.5%. Stocks treading water. Oil futures are falling a day after Federal Reserve policymakers disabused optimistic investors of the notion that interest rates will abate soon. Crude, West Texas Intermediate down 1.9%, $80.09 a barrel. Brent, the global benchmark, down 2.3%, $87.70 a barrel on Brent. So again, the 10-year 3.80%, the 2-year 4.50%, and gold down 0.7, $17.48 the ounce. Bitcoin right now down 0.5%. Bitcoin 16,590. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, COP 2027, we know, wrapping up in Egypt, a lot of headlines came out of that. And with that as a backdrop, there's a story you'll find in the new issue of Bloomberg Businessweek magazine that's now out on newsstands, online, and on the Bloomberg. It is about the nation caught in the crosshairs of climate change that's getting rich. And here's the kick. On oil, it's getting rich on oil. This story happens to also be the Bloomberg Big Take today.
The story written by Monte Real, senior investigations reporter at Bloomberg News. He joins us via Zoom from Chicago. Also with us this afternoon is Joel Weber. He's the editor of Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Joel, I want to start off with you because it is today's Big Take. It's in the upcoming issue, or the current issue of Bloomberg Business Week magazine. It's the nation is between a rock and a hard place right now, because
drill for oil and hope for the best, and that's basically what I think the story really boils down to, and that is an incredible paradox. And as Monty writes, the coastline of this city or of this country is actually below sea level, so rising seas present obviously a huge challenge. It is historically one of the poorest countries in the world, and yet with this deal with Exxon, they find themselves like potentially, with kind of a one shot at an enormous amount of wealth, and could pull themselves out of that poverty. But to do so also means that here we are in the world of climate change, and it puts the whole country at jeopardy to walk this path. So Monty, incredible story. How is this country, which we call the last petrostate, how is it navigating this challenge? Because this has been a long time in the making, and only now have they really started to accelerate how much oil they're extracting from the country.
Yeah. So this discovery of all this oil came in 2015. So it's been about 7 years now. And I think just to put this in a little bit of context, Guyana is really, really small. There's only about 800,000 people in the whole country. And to put its economy in perspective, the size of its economy and the economic output traditionally has been about, 1/10 of an average American mid-sized city. So it's a very, very small economy we're talking about. And this is a huge, windfall of oil. It's billions of barrels of it. And so the leaders of Guyana, looked at this potential windfall, which is, potentially worth hundreds of billions of dollars. And politically, they could not pass up the chance to drill this. And so they began drilling about 3 years ago. And since then, Guyana has become the fastest growing economy in the world. Its capital budget just in the last year, I think, grew more than 100%. And so with all of this growth, though, there are critics who are saying that the oil drilling has kind of spun out of control already. There's a lot of complaints that environmental regulations have kind of been tossed to the wayside. And there's a lot of criticism of the contract itself with ExxonMobil, which is drilling the oil. A lot of people say that the terms of that contract were lopsided in favor of the company at the expense of the residents of the country.
Hey, Monty, I was pretty struck when you wrote about the ecology of the island and what there is in the rainforest where people don't live. Talk a little bit about what you see there and really this area of the world and what it has. Really, this area of the world and what it has to offer.
Yeah, so Guyana is, it is one of the most sparsely populated countries in the Western Hemisphere. And, part of the reason for that is of those 800,000 people, 90% of them live right along the coast in a narrow strip. And so a lot of the interior of the country is forested. It's about 85% covered in forest. And so there are just some unbelievably beautiful parts of Guyana. There are these, big plateaus with waterfalls. There's all sorts of endangered species there. So it's really this kind of ecological treasure.
Right.
And one of the ironies of this story is that Guyana, before they embraced drilling oil, they were seen as a country that was really leading efforts at conservation and ecological conservation, particularly.
So, Monty, help me out here, because in your reporting you say that Guyana's leaders have promised to create a different kind of petrostate, an environmentally sustainable one that uses oil revenue to build a more durable infrastructure powered by renewable energy. Are they not doing that, or is that ultimately where they're going?
Well, that's where they say they're going. They've
how do they do
created
that?
a plan. What's that?
How do they do that?
Well, so they have a plan that's called the Low Carbon Development Strategy. And so what they want to do is use much of the oil revenue to build, one, infrastructure to kind of protect against climate change. And that would include things like reinforcing the seawall. There's a seawall right now that runs along 280 miles of coastline. And that needs to be reinforced and expanded because the Caribbean is projected to rise, up to 6 feet by the end of the century if things stay on the course as they are. So part of the money would go to infrastructure like that. Part of it would go to building basically a new energy grid that would be a post-oil energy grid. So the leaders say that they want to use this money, basically use oil money to finance the transition away from oil. And it sounds paradoxical, and it sounds, on first blush, I guess, like something that goes against most, kind of environmental thinking, like to embrace oil production. This comes, it comes years after the developed countries of the world have promised to wean themselves off of oil. But Guyana will make the argument that it's not fair to a developing country to not be able to have some of the benefits from the oil industry when the developed world has benefited from industrialization and the benefits of fossil fuels and contributed the lion's share to climate change, which countries like Guyana are stuck with the bill to kind of pay for.
Well, I have to say, so much in this story. It's a really great deep read. And I'm thinking even for this weekend or the upcoming holiday weekend, really worth getting into. And this is the quandary that you find many developing nations in. Thank you so much. Monty Reel, Senior Investigations Reporter at Bloomberg News, joining us via Zoom in Chicago. Jill Weber, Editor at Bloomberg Business Week, joining us right here in our studio. The new issue of Bloomberg Business Week. Check it out. It is out on newsstands, online, and on the Bloomberg terminal. Coming up, we're talking markets with our TV colleagues. This is Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And right now we are counting it down to the closing bells. We're about 60 minutes to go here to the end of the trading session, end of the trading week. Scarlett, Romaine Bostic here alongside Scarlett Fu, and we're joined right now by one of our favorite colleagues, Tim Stenovic, as well as Carol Massar. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. I love Carol too. Carol is my favorite as well. She knows that.
Is someone speaking? It's an interesting kind of day, and I thought, because it's kind of mellow, and I feel like as we get ready for the weekend and maybe the holiday week next week, I wanted to look at the names that have really outperformed this week in the S&P 500, and it's a bunch of the retailers. In fact, Ross Stores, Romaine, you've talked about this one in a big way. This stock is up almost 11% for the week overall, and that's coming off of its earnings and some of the results in terms of working down its inventory. You've got Cisco earnings this week and upbeat and raising its outlook. That stock is up about 6.5%. Moderna was up about 7%. Again, one of the top performers this week. And then TJ Maxx also coming out, hitting, in fact, another record today, and that was up about 6%. I just think it's telling, right, that what?
Well, I was going to say that's great, but like as far as like the broader market picture, wouldn't it be better if we saw an Apple and a Tesla and a Microsoft up there? Is this the leadership of the market?
I'm not looking to be better. I'm just trying to say that, you know, here we are coming off of, it's still like earnings that drives stock movements here as we try to make sense of what the Fed's going to do ultimately. We can't really figure out the big macro story. Yeah, I guess I would like to see Apple charging ahead, but you're seeing really investors react to the story of the day, or really reacting to fundamentals, if you will.
I just wanted to copy Carol and do the opposite of what she did. So I'm looking at 4 of the top decliners in the S&P 500 for the week. I talked about Advanced Auto Parts earlier this week, saw its biggest drop in more than 2 years after reporting results that underwhelmed investors. We had the charge-offs from Capital One earlier this week as well that led to a downgrade from Bank of America, finishing the week, well, I don't want to say finishing the week, but rounding out the week at about 15% lower. CarMax down more than 11%. And Live Nation is really the one I wanted to talk about. All you Swifties out there, much of the week's move today comes from today, because the parent company of Ticketmaster and, you know, the New York Times reporting earlier today that the DOJ has opened an investigation, an antitrust investigation into the company. Wow.
Did you get your ticket? Wouldn't it be wild if like Taylor Swift was the one who brought antitrust enforcement to the United States finally?
Well,
you know what? She has power.
She does. Look what she did with streaming.
Yep.
Yeah.
Exactly.
But it's different. David Weston talked about this on his program earlier. It's the stadiums. It's the arenas.
Who is a Swiftie, by the way?
Who is not a Swiftie, Carol? That is the real question.
If you're not a Swiftie, get off this air right now.
All right, well, we're going to continue going on. If you're not a Swiftie, keep watching, please. The major indices right now not doing a whole lot, basically either down roughly about 2 to 0.3%, or up about 2 to 0.3%. The S&P up 0.2, the Dow up 0.4, the NASDAQ Composite lower on the day, but you put it all together across the board, they're all lower, guys, on a weekly basis.
And it's really a mixed picture when you look at the industry groups. Utilities are doing the best, up about 1.9%. Most of the gainers, most of the members there are up, except for one name. In healthcare, you've got Elevance, which is the company formerly known as Anthem, leading the way there, and energy leading the way down. I was just taking a look at volume, and with 1 hour to go in trading, volume is about 44% below the year-to-date average. Of course, a lot of stuff can happen in this final hour.
Yeah, we'll keep an eye on that here. As far as some of the individual movers, you're getting a few bright spots out there. You're going to find that in General Motors, the shares up 2.5%. You were just talking about the retailers, Carol. I was keeping an eye on Williams-Sonoma, which I thought would perform a little bit better. We did get those earnings down about 6% here right now, and Coinbase getting an interesting downgrade today. A lot of concerns here about the ripple effects from FTX into Coinbase, not necessarily in terms of financial exposure, but more in terms of the crisis of confidence. Those shares down 7%. And at the bottom of your screen, guess what? We actually have a new addition.
Today?
Grinder coming to the market.
Today.
Yeah, up 211% right now, at least based off that. 36.28, something to keep an eye on. This, of course, came to the market through a SPAC deal, but nevertheless, maybe it shows that there is some optimism for new issues. Before we move on, I do want to circle back to what Scarlett was just saying, and you can put up my next term here, because, yeah, I was looking at volume is incredibly light right now here, but this is an option expiration day here, the monthly OPEX, and there's been a lot of volatility around this that preceded it. In fact, Wednesday, we actually saw the biggest jump the biggest activity in single stocks here, that CBOE put call ratio on Wednesday actually hit its highest level going back to 1997 here. So I think a lot of people were trying to front run the expiration that we're getting today here, but keep an eye on this space over the next 50 minutes or so here, because we could see volume pick back up.
When there's options activity on individual names, is it on all the meme stocks or is it on boring stocks?
It's on any. So whatever you want it to be.
You can do it on anything. Hey, speaking of doing anything, it does feel like that's what Wall Street economists are thinking about when it comes to Fed policy in 2023. Right now, they're split on whether the Fed will actually cut rates next year. So that is out there. It's among our most read stories on the Bloomberg. One thing I do feel like there is a consensus, whether it's a hawkish or dovish Fed member, they're pretty consistent on kind of this message of it's all about getting inflation down. And add to that list Fed Reserve Bank of President Susan Collins. She made some comments at a Fed event in Boston today. Here's what she had to say.
There is more work to be done. I expect that this will require additional increases in the federal funds rate, followed by a period of holding rates at a sufficiently restrictive level for some time. The latest data have not reduced my sense of what sufficiently restrictive may mean or my resolve to bring inflation down.
And guys, I love that last line. Restrictive stance will be needed for some time, which as we know, and that's Susan Collins from the Boston Fed, president there, it leaves a lot of room for interpretation, and the Fed is really good about doing that, Romain.
Absolutely, though I will say that we seem to be hearing this from multiple Fed members, that phrase or some turn of that phrase of basically keeping things restrictive. And it gets to this idea of a pivot, because as everyone, all our guests remind us, a pivot means the Fed is going to start cutting rates. And there seems to be a consensus here, at least from the the members that have spoken publicly, that that's not going to happen, that when they get to that terminal rate, they plan to hang out there for a little while.
It's a pivot, a sort of pivot.
Is it kind of a repeat of what we saw over the summer, where the market gets a little ahead of itself, rallying, Scarlett, and then Fed officials have to come out and say, wait a second, this is not really what we're going for. I mean, I think back to Neil Kashkari's comments on the Odd Lots podcast over the summer. That helped squash a rally.
Yeah, it's all about managing expectations. And you're right. This, what was the turn of phrase? Restrictive policy for a longer period?
Sufficiently restrictive.
Sufficiently restrictive. I mean, that sounds really lawyered over, but does that really just mean we're going to pause for a while?
She was definitely reading from something. Like, that was a very specific turn of phrase, right?
A lot of lawyers had to look that one over.
But that's what the market is going to have to contend with here. I mean, we were talking with Gina Martin Adams on Bloomberg Television a little while ago, and she was talking about valuations in the context of where interest rates are. And if we're getting up to a 5% terminal rate or above, and then they plan to hang out there for months, maybe even longer than that, what does that mean for a revaluation of the market?
Well, don't ask Wall Street economists, because right now they're split about what's going to happen in 2023 when it comes to cuts. All right, guys, we're going to be back in less than an hour's time. Our cross-platform coverage on the markets, on radio, TV, YouTube, and on Bloomberg Quick Take. It's going to continue. We're going to count you down to the close with Beyond the Bell at 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on TGIF. Yes, it is Friday. What's interesting, and we've noticed this, I feel like, in the last couple of days, once again, we're seeing, what do we have, about less than an hour's to go until the closing bell. We're seeing some buying once again here in this last hour.
Finally seeing some direction?
I don't know if
is that too strong of a word to use?
We've been up and down today, so some volatility continues even as the VIX continues to go down almost a full point. We're at 23 and change here. But I do always find it interesting heading into a weekend, heading into a holiday week, that if we start to continue to see some buying into the close, I always find that, that's a sign of strength, I think.
Yeah, I think that's a really good point. I want to go to something, too,
side.
that Scarlett said. She referred to low volume, and she used compared to what we've seen this year, I'm looking at 20-day volumes, down 25% about, in terms of volume today versus the average over the last 20 days. And leads me to ask if people are on vacation already at this point, or if they're just waiting for other eco data, if they are too split.
I think it's often you see in a holiday week, people either heading out early, they're going away, they're maybe taking off, more than a week or so.
Who does that for Thanksgiving? That sounds really nice.
Where are you going?
Yeah, I'm going to Cincinnati, but I'm going for 4 days.
I'm anchoring.
And those are the most expensive plane tickets I've ever bought in my life. I know I've complained about that a lot.
Sorry, son, there will be no college education.
Exactly. We went to Cincinnati once, so you will not be going to college.
All right, everybody. Quick check on the markets. As we said, a little bit of a uptick in the S&P, but it's just up about 1/3 Dow Jones Industrial Average, a gain of just under 0.5%, up 153 points. Nasdaq still to the downside, but Tim, it's down just 14 points, or down 0.1%.
All right, markets open for another hour or so, or 50 minutes, I should say. In the meantime, let's go to Denise Pellegrini. She's standing by right now in our newsroom. Hey, Denise.
Hey there, Tim. Thank you. The Justice Department is appointing prosecutor Jack Smith to oversee criminal investigations related to former President Trump and the January 6th insurrection, and also possession of classified documents after he was president. AG Merrick Garland says it's about the timing.
Based on recent developments, including the former president's announcement that he is a candidate for president in the next election, and the sitting president's stated intention to be a candidate as well, I have concluded that it is in the public interest to appoint a special counsel.
AG Merrick Garland there. And Bloomberg's Joe Matthew tells us there's a sense cases against the former President Trump are building now.
January 6th really changed the picture, I think, and the document investigation at Mar-a-Lago changed the picture. They know they have goods. It's been suggested that they believe they have enough to indict now. When you add the investigation into the mob at the Capitol, they have an enormous amount of evidence to pour through.
And Joe Matthew there, host of Bloomberg Sound On. And some key leadership positions in the House of Representatives, meantime, are likely to see a shakeup. We get more on that from Bloomberg's Amy Morris.
We already know Democrats will see changes as Nancy Pelosi steps down, but Republicans are also debating whether to keep subcommittee leaders in certain positions. Several top Republican appropriators are term limited, but they could get waivers to keep serving in the same positions. However, if they did step down, that could create openings for others to seek promotions. Some say they don't see the point in changing assignments just for the sake of change, but that they will defer to Republican leader Kevin McCarthy. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy. In Global News, 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini with World and National News there of Bloomberg News. This story actually jumped at us by our Martine Paris. It's on the Bloomberg and at Bloomberg.com. Banksy, you know, the artist. Nobody really knows who this person is, right? Art just kind of pops up. It's very cool.
I know who. I don't really know. I was just saying that.
That was pretty good.
Thank you.
You almost had us.
I was going to try to make like a Satoshi
Did you hear our
Nakamoto
producer's
joke.
big laugh in
Yeah,
the
Paul,
control
I
room?
could hear you, Paul. We have soundproof glass up here, but sometimes, you know, when we do something,
His laugh, he just penetrates.
it's always the laugh that we hear. It's never when he's frustrated with us.
No, we never hear when he's frustrated. That doesn't penetrate. Well, Banksy has accused clothing retailer Guess of stealing his iconic flower thrower motif for a store displays on Regent Street in London, and has urged his 11.5 million Instagram followers to shoplift from the store. First of all, please don't shoplift.
Over the years, the artist has
against
had
the
his
law.
trademark registration challenged due to, in part, his desire to conceal his identity. Initially, the European Union Intellectual Property Office ruled that his anonymity prevented his ability to trademark various images. But on November 16th, the European Union Board of Appeals overruled that decision, according to Art News, meaning he now has the ability to seek intellectual property protection for images like Flower Thrower.
All right, and as our reporting goes, it's unclear whether Guess has licensed the rights to use the artist's image in its clothing line. No mention of Brandalized or Banksy can be found on the Guess website, but a Guess X Brandalized press release issued by a Belgian marketing agency that represents its works for Guess shows a fall-winter 2022 capsule collection featuring casual apparel inspired by Banksy's graffiti.
Do you remember back in 2018 that Banksy Love is in the Bin was shredded live during the auction?
Oh, yes, yes.
How cool was that?
Yes. It was wild.
It was absolutely
like somebody paid
wild.
Wicked money.
For it even after the fact, it was
Right,
shredded. Yeah.
right. Like that was...
And like in real time,
that was
everyone,
the art.
you can hear the gasps from the crowd as they just watch this, work of art worth so much money being shredded.
Art can be a wacky world sometimes.
Yeah, it can.
All right. We'll be back. We've got more coming up. Our weekly crypto segment in just a moment. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellett. We've got stocks trading mixed. The Dow higher, S&P higher, NASDAQ is lower, and this update is brought to you by SEI with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/tech. S&P right now higher by 10, gain there of 0.3%. The Dow up 137, now up by 0.4%. NASDAQ down 20, a drop there of 0.2%. 42 minutes to go ahead of the closing bell. Bottom line here, equities little changed. Oil futures dropping below $80 a barrel a day after Fed policymakers re-emphasize that interest rates still need to head higher to battle inflation. 10-year yield 3.81% with a 2-year 4.51%. Spot gold down $11 the ounce to $17.49, down 0.7%. Bitcoin down 0.2%, 16,642. The drop in oil I was talking about down 2.3%, 79.75 a barrel right now on West Texas Intermediate crude. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, next half hour, Charlie, first of all, thank you. Next half hour, it's really all about crypto, kind of perfect considering the last couple of weeks and the collapse of FTX and the undoing, if you will, of SBF and his empire. And in our weekly crypto segment, we've got an entrepreneur entrenched in the crypto world.
Yeah, we're talking to Alexander Dreyfus, the founder and CEO of a global blockchain company. It's called Chiliz, and then also the CEO of the sports app Socios.com. Alexander joins us via Zoom from Malta this afternoon. Alexander, good to have you with us. First of all, Malta. Why are you in Malta?
Much for the invitation. I've been in Malta for 16 years, even though you probably guessed that I have a French accent. And I've been there just because I was working in the online gaming industry for 15 years before crypto. So that was the place where I moved, and I'm happy to be here.
Well, tell us a little bit about your company, because from what I understand is, as Tim mentioned, you're a founder and CEO of the global blockchain company Chiliz, and I hope we're saying it correctly. Are we?
You do it perfectly.
Okay, we were a little worried.
We did practice a lot, Carol, to be fair.
And then you've got your CEO of Socios.com, and Socios is powered by Chiliz. So help me out, and forgive me, because the past 2 weeks in FTX and SBF, you know, we are realizing that there's not always so much transparency when it comes to things in the crypto world. So explain, if you would, the relationships between those two companies that you are both CEO of.
Yes, it's pretty easy. So first of all, we are a blockchain. Chiliz is a blockchain, number 30th today, I think, in the rankings. And what we provide is an infrastructure for the sports industry to create a concept that we invented called fan tokens. And these fan tokens are used on a consumer app called Socios.com, which has like 1.8 million users, something like that. And our business is to try to help sports property all over the world to engage and monetize their fan base. And the idea is that a fan can buy a fan token that gives them the right to vote on some decision of the club and get some like membership benefits provided by the team or provided by us. That's how it started 4.5 years ago, and now we work with 170 teams all over the world, 300 employees, etc.
And how many have you sold?
A lot. We have 70 teams launched, I will say, and it generated a few $100 million of revenue for the last 2 years, actually.
Why, Alexander, does it have to be on the blockchain? Why can't teams do this without blockchain technology?
I love that question. So the reality is that 99% of sports fans are not in a stadium, not in a city, not even in the country of the team they are supporting. So we were looking to create something that was both valuable for a fan and scalable for a team. And what is valuable for a fan is to have a voice, to be recognized. So the fact that you can vote on the blockchain, unlike the SMS that you send, on a TV show on a Saturday night, where you have absolutely zero transparency about who's going to be voted out of a TV show, here the voting of you deciding as a fan something related to your team is on the blockchain. And that was actually the foundation of what we've done.
So these fan tokens that you said you've sold and generated a few $100 million, I guess, in revenue, I'm assuming?
Yes, in revenue, yes.
Those fan coins, can they be bought back by fans?
Yes, because they're on the blockchain, because they are digital assets, they are tradable, and therefore they are available to the market where more or less anywhere in the world.
So, and in terms of, and again, forgive me because we're dealing with the backdrop of the last 2 weeks. So, those coins, do you keep 50% of the like? Do you leverage them? Do you do something with those coins? I'm just curious if all of a sudden everybody that has fan coins came in and said, "I want to buy them back," could you do it?
No, you cannot redeem them. It's it's like a membership program. Once you buy it, it's yours. If you want to sell it to someone else, you can. See that a little bit as a collectible. There is nothing that is, it's not redeemable. There is no collateral. It's just a digital membership that has scarcity where fans can trade it against each other if they want.
And so how many members do you have?
1.8 million.
1.8 million, okay.
Hey, Alexander, again, with the context of everything that's happened in the last 2 weeks, I mean, this has certainly been a momentous time when it comes to Web3, when it comes to everything that's even tertiarily related to crypto. I'm just wondering what that does to your business, the way that you're watching this news unfold from FTX, from Binance, and the like. Does it damage the reputation of the industry and to the extent that it hits you?
It's disappointing for me as an entrepreneur because I've met Sam. Actually, I've been in Bahamas, so I know them very well. I like to say to our, and that's what I said to our colleagues, it doesn't impact us, but it affects us. It doesn't impact us as a business because we have no relationship, we had zero exposure, but it affects us obviously as an industry because of course we are in a crypto space. Having said so, we are not an exchange. We are not in a business of lending money. We're in a sports space. Bitcoin could go to zero tomorrow morning. We will still have a business, and that's a big difference. And what I think we're gonna realize in the next hopefully 6 months to 1 year is blockchain/crypto is not just about finance. There are other utility, other application, and hopefully one of us is this.
Hey, Alexander, just got about 30 seconds. Have you talked to SBF since all of this?
Definitely not. Definitely not.
Are you a little angry, though, as someone who's also kind of in this world to see what has happened? Just quickly.
I'm frustrated and disappointed because it damaged an industry that didn't need that.
All right, we're gonna leave it there. Look forward to hearing more about your business going forward. Alexander Dreyfus, founder and CEO of the global blockchain company Chiliz. He's also CEO of the blockchain platform for fan engagement and fan monetization of sports team. That's Socios.com. Socios, as we mentioned, is powered by Chiliz, just so that we understand that relationship. And Alexander joining us via Zoom in Malta. You are listening and watching Bloomberg Business Week. Carol Master along with Tim Stanovec. Coming up, where we're gonna go? More crypto.
Well, we're gonna do a little bit of crypto and also an update on Merrick Garland as well. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, Bloomberg Business Week. And among our most read on the Bloomberg, this has to do with the Department of Justice naming a special counsel to look into former President Donald Trump, and they're doing it because of his 2024 bid for the White House.
Yeah, we're going to get the details from Eric Larson, Bloomberg News U.S. legal reporter, in just a minute. First up, though, Charlie Pellet, we got less than a half hour to go.
Indeed, Tim, and right now we're looking at a mixed market with NASDAQ may or may not turn into the green, but right now down 0.5 point. We've got the S&P higher by 17, up by 0.4%. Stocks do seem to be moving higher ahead of the close here. Final half hour, we've got the Dow up 185, up by 0.6%. And again, NASDAQ right now down by less than 0.5 point. 10-year yield 3.81%, with a 2-year yielding 4.51%. Spot gold down $11 the ounce, down 0.7%. 17.48 right now on the precious metal, while West Texas Intermediate crude is down 2%, 80.05 a barrel on WTI. The crude market structure is signaling oversupply for the first time in almost a year. And with more on what is happening in trading, oil trading, I'm Rita Sen, is co-founder of Energy Aspects.
No, I think there's a lot of confusion in the market right now, right? And yes, demand in China is weak, and this is something we've been saying for some time. Don't get too excited by all the headlines coming out of China about reopening, because that reopening isn't happening till April of next year.
And again, West Texas Intermediate crude oil is trading lower now, down by just about 2%. Oil stocks lower across the board. Some of the names that we track on a regular basis among the oil majors. ExxonMobil down 0.8%. ADR is a BP down 0.8%. Chevron lower now by 0.6%. EOG Resources down 2.6%. Pioneer Natural down now by 2.5%. Again, recapping, stocks are trading mixed, with the S&P up 16, now up 4/10. 10-year yield 3.82%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as we mentioned, our most read, or among our most read on the Bloomberg terminal right now, is the U.S. Justice Department appointing an independent special counsel to oversee criminal investigations related to former President Donald Trump and to decide whether to bring any charges now that he is making a third run for the White House in 2024.
We've got a Bloomberg News U.S. legal reporter Eric Larson joining us now. He's the perfect guy to break down what we need to know about this and also explain the process here. So, Eric, what is the special counsel going to do when it comes to the investigation? What is the process here?
So right now, this special counsel's responsibility is going to be to take over the existing investigation into Trump's handling of White House records, of course, related to the search of Mar-a-Lago, and also the January 6th insurrection and any role that Trump and others had in that attack on the Capitol. He's going to be overseeing all of these investigations and making any decision on charging. So it's a huge responsibility. And it was kind of unexpected. I don't think anyone was quite sure this was going to happen, but here we are.
Do we have any idea of like a timeline of how this plays out?
You know, we really don't. They used the word expeditiously a lot during this. Attorney General Merrick Garland had a meeting earlier, issued a statement, and they said that this is not going to slow down the investigation. It's hard to know for sure if that's accurate or not. I mean, I've spoken with some former federal prosecutor types who said that appointing a special counsel will definitely slow things down, just because you have to get all these investigators up to speed, hire staff, get an office for this independent role. So we'll see, but they seem to be making a concerted effort to tell us that it's not going to slow down.
I could see a critic of a move like this saying, okay, when is it going to stop? You know, if they see it as politically charged, they would say Democrats have impeached the president twice. They have convened a January 6th panel. Nothing has essentially stuck to him to the extent that many people want to see. How should that be read in the context of the move from Garland today in terms of sort of seriousness of what's going on?
Well, I would say that there's still a major legal threat, including potential criminal charges facing Trump. And that's kind of separate from what he's already dealt with already in terms of the January 6th committee. Of course, that had nothing to do with the DOJ investigation. And that was very public. What the DOJ is doing behind the scenes here is all very private, secret. We don't know what their deliberations are like. So as far as a witch hunt, we all saw what happened on January 6th, and we all know what was seized from Trump's home at Mar-a-Lago. So I mean, these are legitimate criminal investigations that need to be resolved. And now that he's announced he's running for office, this appointment of a special counsel is supposed to give an impression of independence and from someone who's not necessarily connected directly to the Biden administration, who will make the decision so that it will seem less political when that decision is made.
Help me out, though. If I'm general public, I am part of the general public. The U.S. Attorney General, Merrick Garland, was appointed by President Biden, right?
Yeah.
Runs the Justice Department.
Mm-hmm.
So does this appointment, was it encouraged possibly by the White House, or how does that work?
Well, we can tell you that a source in the White House did tell one of my colleagues that the White House did not get any heads up on the decision to appoint a special counsel, that Merrick Garland would have made this decision without consulting at all with the Biden administration, with the White House, because they wanted to, again, make this an independent decision. Of course, the special counsel is ultimately answers to the DOJ, and Merrick Garland ultimately answers to Biden. So it's not that there's a complete division here, but this is as good as you can get when you are someone who's under criminal investigation and you've decided to run for president.
And to be fair, President Trump has done the same thing, right, when he was in the White House?
Well, he didn't appoint Robert Mueller. That was the Attorney General appointed Robert Mueller as special counsel. But that did, that does show that there is some independence from the DOJ, from the White House, being able to appoint a special counsel into a sitting president. And here we have one appointing a special counsel into a former president, the same person. Again, it's all about this feeling of independence. But as we saw with Robert Mueller, even though he was a Republican and was known for playing by the books, he was immediately attacked by Trump and all of his supporters anyway. So that independence and that lack of bias didn't really get him much in the end.
What do we know about John L. Jack Smith?
I had never heard of him before, just recently, but we know now that he was a former federal prosecutor in Tennessee. He led a division in the Justice Department of Public Integrity Unit. And more recently, he's been a war crimes prosecutor in The Hague related to war crimes in Kosovo, which, that is still ongoing. So he's got quite an interesting career, actually.
Go ahead.
I was just going to say, in terms of timing here, how long does something like this take? Like, what should we expect?
Well, that's the big question. Some of the people that I've spoken with in terms of timing, they've said that they would really have to make a decision on charging by spring, because how else would you have a whole criminal trial potentially happen before an election, before the primaries? So you would need at least a year maybe for a case. This is what they've told me, that if you don't want to have someone on a ballot for a primary who is under criminal investigation or going to trial, then you need to wrap that up before then, which would mean making a decision fairly soon, in the spring, I was told.
Especially if it means questioning also the former president.
Right.
It's tricky. Thank you so much. Made some sense out of those headlines today. Bloomberg News U.S. legal reporter Eric Larson in our studio.
And to Denise Pellegrini we go for an update on world and national news. She's in the Bloomberg newsroom. Hey, Denise.
Yeah, as you were just talking about, Attorney General Merrick Garland appointing a special counsel to oversee investigations in the Justice Department. This will involve former President Trump's his transfer of power up to and including January 6th, we're told, and also the investigation into the presence of classified documents at his Mar-a-Lago estate. Now, Garland says Jack Smith is really going to hit the ground running here.
Mr. Smith will begin his work as special counsel immediately and will be returning to the United States from The Hague.
Rushing home from The Hague, he says. And Garland says Smith has been serving as a prosecutor, as you just mentioned, for the special court in The Hague, so he is considered a heavy hitter. President Biden says global leaders want to stick together to help the global economy along.
There's a strong sense from all the leaders of the world of the strength of the American economy, and we've seen the willingness to want to work together and also here at home.
And Biden commenting fresh from his trip to the G20 summit in Asia next week. We're hearing, meantime, the G7 will be setting a price cap on Russian oil. That's according to sources. to Bloomberg. After a couple days of silence, Taylor Swift is responding to this week's Ticketmaster fiasco. She's out with a post now on Instagram. She says she trusted Ticketmaster to handle things, and they let her fans down. She says she asked them multiple times if they could handle this kind of demand, and they assured her they could. And if you're studying for the LSATs, you might be able to take a break. Wall Street Journal says the law school accrediting panel has voted to make the exam optional now. And that's amid a debate about whether the exam helps or hurts diversity in admissions. Global News, 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini.
All right, Denise, thank you so much. Denise talking about Taylor Swift. We can't get enough of this story. And I feel like Taylor Swift, if she was writing, a song about this, would be like,
she's prolific, Carol. She's probably already written a song about it.
I know
That's how many. She releases so many albums.
It'll be the Ticketmaster Meltdowns album or something.
You do have to wonder, though, like you said earlier, and for those who weren't listening at that point, she has the power for companies to make big changes. You saw what she did with the streaming industry. I believe it was an open letter years ago.
Yeah.
This is a huge story.
She's got very much in control of her own music in terms of where it goes and how it's released.
But she can't be in control of her live performances because of the way these deals work with stadiums.
No, exactly. And Taylor Swift, Denise was talking about, I guess, what she's saying out on social.
Mm-hmm.
She has made her first public comments on the bungled presale for her upcoming Eras Tour concerts, saying it was excruciating to watch mistakes happen with no recourse.
One of our colleagues sending me a note saying that Bad Blood would be the song already.
Oh, my God.
I think.
That's funny.
That is funny. Thanks for listening.
We're all going to be... Touch. Who's listening? Is that Matt?
It was Denise who sent it.
Oh, Denise.
I don't know how she does so much at once.
I don't know.
I thought she was just on with us.
Now I'm Googling Taylor Swift songs. Anyway, in a statement posted on Instagram or to an Instagram story, Taylor Swift made no explicit mention of Ticketmaster Entertainment, which canceled, as you know, Friday's planned general public ticket sale after overwhelming demand at the pre-sale stage aimed at Swift's verified fans left it with insufficient remaining ticket inventory. I don't know about you, but I've tried to buy some tickets for some things, and it's amazing how many tickets are just gone in a flash, and you can't help but feel like it was bought up by, I don't know, others.
And look, here's what she said, Carol. I'm not going to make excuses for anyone because we asked them multiple times if they could handle this kind of demand, and we were assured they could. She said that she had bought many elements of her career to run in-house over the years, and it remains really difficult for her to trust an outside entity.
Yeah, we've got lawmakers and state attorneys general saying this week that they would heighten scrutiny over Ticketmaster's dominance of the primary ticketing sales. So that is certainly out there. All right, you're listening and watching Bloomberg Business Week.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pella. 13 minutes to go ahead of the closing bell. We are seeing buying into the close right now with the S&P 500 index up 22 points, gain right now of about 0.6%. We've got the Dow up 218 now, up by 0.7%. NASDAQ up 13. That is a gain of just about 0.1%. Oil futures right now, they are at $80.21 a barrel. West Texas Intermediate crude down 1.7% a day after Federal Reserve policymakers re-emphasize that interest rates still need to head higher to battle inflation. The 10-year's yielding 3.82% with the 2-year at 4.52%. Spot gold down $11 the ounce to $17.49. Gold right now lower by 0.6%. Bitcoin down $63, down 0.4%, 16,616. Bottom line here, late day rally with the S&P up by about 0.6%. U.S. Special Presidential Envoy for Climate John Kerry is isolating after testing positive for COVID-19, complicating efforts to reach a new international agreement in Sharm el-Sheikh, Egypt. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. In one sense, investors and regulators should be grateful to Sam Bankman-Fried, the erstwhile head of the FTX cryptocurrency exchange. The spectacular flameout of his virtual empire has become a masterclass on everything that's wrong with crypto markets. Several lessons stand out. That crypto-denominated assets warrant skepticism, for example, that market capitalization isn't the same as value, and that accounting and consumer protections really do matter. Whatever the potential benefits of crypto, the surrounding speculative frenzy has little to do with them. On the contrary, it has mostly served to separate people from their money, as FTX has shown. Lawmakers and regulators should act to keep crypto from threatening the broader financial system. And in the meantime, the message for investors and traditional finance remains simple: stay away. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in today's trading session. We are getting ready to wrap up the day as well as the trading week. And we've seen some buying once again into these last few minutes. That means everything in terms of those major equity averages. We're now in the green, so as Charlie mentioned, not at our highs, although it looks like the Dow and the S&P getting close. S&P, though, up 0.7%. Same story for the Dow Jones Industrial Average, and the NASDAQ just eking out a little bit of a gain.
And it's going to be, for the week, Carol, the Dow up more than 0.1% if it sticks right here. Barely. Let's get into it with Aaron Kennan, co-founder and CEO of Clear Harbor Asset Management. They've got over $1 billion in assets under management. Aaron joins us this afternoon once again from Stamford, Connecticut. You can see him if you're watching on Quick Take or on YouTube. Aaron, good to have you with us this afternoon. How are you?
Doing just great, Tim. Thanks for having me back.
So what's going on with the markets right now? Because Carol mentioned volatility today. Throughout much of the day, we saw stocks moving between gains and losses, but we're seeing a little bit of conviction right now. What's your take?
Yeah, I mean, clearly we don't take much away from a low volume day ahead of Thanksgiving on a Friday. But, if you look at just sort of on a quarter-to-date basis, just taking a slightly higher level view, clearly, we've seen the dollar finally depreciate about 7% from the peak from late September. And on the heels of that, we saw a nice risk-on trade occur over that period. So equities are up 10, 11, 12%, depending on the index. The global indices are up about 11, almost 12%. The U.S. S&P is up a little over 10% over that period. And even the bond market's caught a reasonable bid, the broad sort of Bloomberg aggregate, up 1.1%. So, we think that sort of augurs reasonably well. The Fed did a lot of job owning this week, Tim and Carol, as we saw, trying to keep.
It's even hard to keep track of all that job owning.
Yeah, that's right. I mean, trying to keep the sort of hawkish tone embedded in the market. But, the market's currently pricing in another 100 basis points. They've already done 400. And so we're in the latter innings of a tightening cycle, and we're starting to see incipient levels of deceleration on inflation. And so, I think that bodes well for, the Fed to get out of our way for at least the back half of 2023.
I do feel the narrative has definitely changed from Fed officials, Aaron, even if they're not using the word pivot, they're kind of talking around it. And I laugh that when we've got a most read story by our Steve Matthews and Serena Yu, where it's talking about Wall Street economists split on whether Fed cuts rates in 2023, that we're starting to think about a Fed cut next year as a possibility. That to me is a real big shift in the narrative.
Yeah, I agree, Carol. And I think there's also, an anticipation that the Fed's policies do, in fact, work with that lag.
Right.
And we're going to start to see employment. We're certainly seeing the anecdotal evidence of employment softening. The JOLTS data has at least softened on the margin. And so maybe the Fed does move that aggregate demand curve to such a degree after, let's say, hitting that 5% terminal rate, that we start to see the economic deceleration that they anticipated. And I suspect over the next 2 quarters, we'll see a reasonably significant change in the data set. And that'll set up for an interesting 2023. But then we have earnings to really think about. And we have the gridlock in Congress. We don't have that fiscal stimulus that we had over the last couple of years to sort of serve as that tailwind for growth. And we have a demographic picture that every year just looks a little worse.
Right.
And then we have debt levels that spiked during COVID and are not getting much better. And so we'll probably have a debt load in this country of 3.5 times, public debt load, 3.5 times where we were the last time we had an inflation crisis in the 70s. So it doesn't bode well for sort of growth trending back or above trend, above, let's say, a 2% trend. It seems to suggest that we're going to be in a below 2% world for a long while here in the U.S.
I'm kind of glad you went there, Aaron. I do think it's important that we watch the debt loads overall. And certainly, we talk a lot about specifically consumer spending and how they're spending and where they're putting it. And I think that's going to be a great indicator, possibly to the downside of what happens in 2023. You did say, and I want to go back to, you expect over the next 2 quarters to see a very different data set. Will that data set, I'm assuming, mean recession or not necessarily, or just kind of an extreme slowing down?
Well, I think the market's trying to sort that out. As we know, the equity market's a discounting instrument, and certainly the volatility that we've seen of late is sort of this uncertainty around one, will we actually enter a true recession? Maybe we already did. The NBER hasn't come out and indicated whether the prior 2 quarters were in fact an official recession. We'll find that out next year, I guess.
Right.
But I think that maybe the more important question is whether or not the recession is shallow or deep. If it's shallow, I think a great deal of that is sort of was priced in at the end of September into the market. One reason why we've seen the rally. If it's a deeper recession, well, this may be a sort of false dawn for equities, having rallied nicely off of those levels. And so we're certainly being, extraordinarily mindful of that. Mm-hmm. Certainly, the stickiness factor in the CPI is wages, and with higher wages, you tend to see margins contract. And so we're certainly going to keep vigilance on that trend going into 2023. What do margins do in a slower growth world when wages haven't corrected and normalized? And certainly an important factor. Then, of course, globally, we have, another pivot, which is the zero COVID policy in China, and whether or not President Xi's pivot is real or not, because that has huge repercussions for global demand for copper, demand for oil, and demand for just generally goods and services.
Well, that commodity space that we talked about that earlier, and I think it's going back to China too is so interesting. We have a ton of stories on the Bloomberg this week that even as they seem to be easing that COVID zero thinking, people are afraid to go out in the public because they're just afraid they're going to get COVID, and this is over in China, and that's going to impact growth over in the Chinese economy for a while.
It'll impact growth, but it also has huge global repercussions. I mean, Chinese growth is expected to be around 3% next year. It was only a few years ago, we were talking 7, 8, 9, 10% type of growth. The idea that they could switch off the zero COVID switch probably increases oil demand immediately by about 1.5 million barrels a day by most estimates. So has huge global repercussions. And of course, the war in Ukraine is having massive negative repercussions for the price of natural gas in Europe's largest economy, in Germany.
Right.
I mean, that's the largest economy in Europe. They need cheap natural gas to be able to do what they do, to be that industrial powerhouse.
Right.
And they don't have, and it looks like they won't have it next year either, and maybe the year after that too.
All right. Well,
So,
I monopolized the time with you. Tim's mad at me, but that's because we love talking with you, Aaron.
Aaron, we're going to get you back on soon because, come on,
will.
Carol. It's okay.
We will.
You had good questions, Carol.
Aaron, have a great Thanksgiving. He's co-founder, CEO at Clear Harbor Asset Management. Time to head over to our TV colleagues, our cross-platform coverage on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Scarlett Fu, when we're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. I'm pleased to say we are joined by Carol Master and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube and Quick Take. Carol, interesting week here.
Yeah.
Not necessarily in terms of the magnitude of the moves, but certainly a lot of repositioning.
Yeah, absolutely. Good way to say it. And a lot of kind of movement all around the place as we move to that repositioning, if you will, even on in today's trade. We just talked with Aaron Kennan over at Clear Harbor Asset Management. He's really watching the next couple of months and the next couple of quarters when it comes to data sets. And he says we're going to see a very different data set. Not sure if it's going to clearly say we are in a recession or whether or not it's just an extreme slowdown. So TBD, but nonetheless, that's what he's keeping his eye on.
Yeah, he said make sure not to, pay too much attention to a day like today where we got low volume, Scarlett. It's the Friday before a holiday week, so don't read into it too much. But building off of what Carol just said, in addition to what happens with, NBER data or data that could indicate whether or not we're in a recession, look at what happens in China over the next few months, whether there is some sort of relaxation of COVID-0. That's really important to keep an eye on.
Yeah, and I'm looking at volume since you're saying don't read too much into what's been going on, and we are well below the 3-month average, 24% below the 3-month average right now when it comes to volume, and there's still a minute to go, so we're definitely not going to make up the difference here. You wonder if this is going to be the template for the next week and maybe the week after that as well, because everyone's waiting for the next data point.
Yeah, when you look all across the state tapes here in the U.S., I mean, we're right now about 16% below, 24% on the S&P 500. And keep in mind, of course, the week of Thanksgiving is a traditionally low volume week. In fact, the Friday after Thanksgiving, typically the second lowest volume day of the year. You hear the people cheering, you hear the people clapping here are your closing bell numbers coming out of New York. The Dow Jones Industrial Average higher by 0.6%. The S&P 500 higher by 0.5%. The NASDAQ Composite only higher by 0.1%. And the Russell 2000, I think I got that right, and the Russell 2000 going to finish the day higher by about 0.6%.
I mean, call it close there. If I look at the S&P 500, a little bit of a deeper dive into it. We're going to get into the industry groups in just a moment, but more of the names in the S&P are higher today, 388 to be exact, Scarlett, 115 to the downside. So a little bit, if you could say, maybe even more than a little bit of a risk-on trade when it comes to the S&P 500.
Is it a risk-on trade? I look at utilities, and they're the best performers in the S&P 500 on the day, up by better than 2%, with all 30 members higher. Healthcare equipment and services also doing well. So you've got two groups that are up at least 2% right now. A bit of a stealth increase at the end of trading. But again, as Tim mentioned, we can't read too much into it, given the low volumes, given the options expiration. There might be a lot of back and forth, a lot of repositioning, closing out positions, setting up new positions going on underneath the sector groups. Energy, the big losers on the day, down 0.9%.
I'm just going to say, Scarlett, there's more green than red there.
This is true.
All right, let's get to some of the individual gainers in today's session. WOA, Ross Stores was up 18% at its highs today, finishing the day with just under a 10% gain. It was the #1 gainer in the S&P 500, top of the NASDAQ 100 as well, soaring the most, I think, about 2 years. They boosted their full-year profit forecast. Analysts saying the off-price retailers report significantly better than expected. They did, though, note that macro uncertainty continues to negatively impact consumer sentiment and demand. So just putting that out there, but nonetheless, investors rushing in big time. Another retailer, The Gap, also outperformance, up 7.5% in today's session, rallying today. It was up almost 11% at its highs, though. It posted third quarter sales and profit that beat estimates that were out there. You had a lot of analysts also hiking their price targets on that name. And then, Romaine, you mentioned this. I thought this was just kind of a cool one to mention. Grindr up 514% at its highs, up 213% by the close here. Of course, the online dating app for the LGBTQ plus community went public via a SPAC that happened last night.
And it's interesting, too. I mean, obviously, a lot of people always make a joke here about Grindr, but we talk about risk appetite in this market and the fact that we haven't seen too many new issues come to market, whether it's through IPOs and certainly not through the more speculative vehicle of SPACs.
It's a $1.2 billion market cap company
this is a
now.
big deal.
Yeah.
Big deal.
All right, you got the gainers, Carol. I'm going to dig into the decliners. Tesla, once again, weighing on the S&P 500. Shares down 1.6% today, but it's the longer term that I'm interested in. Shares down 20% since that deal for Twitter closed for Elon Musk, as he continues to try to wrest control of the company. We talked to Kurt Wagner earlier about the troubles that he's facing with getting employees to actually work on the product there a little earlier in our program today. Carvana finished the day down by more than 3%. The company said it will eliminate 1,500 jobs, which amounts to roughly 8% of the workforce. Carvana is down by 98% from its all-time highs.
I don't understand that. Are they still selling cars?
I mean, that's like a complete wipeout.
The concern is that there's this slowdown in the used car market, but it's got to be bigger than that. It's wiped out almost, 98% of its value. It's pretty wild to see that. And then got to end with Live Nation, finishing it down by close to 8% today. Taylor Swift did make her first public comments on the bungled pre-sale. She didn't mention Ticketmaster. Live Nation is, of course, the parent company of it. She said that it was excruciating to watch mistakes happen with no recourse.
She said bad blood, right?
She didn't say that. She did not.
So did Taylor move the market then? Did Taylor Swift move the market?
No, it was the New York Times report about the DOJ investigation into Ticketmaster.
Oh, okay. So in other words, Taylor moved the market. Taylor, we're all Swifties now, and I just want to go. I do want to go to yields, but just real quick, I do want to point out Carvana actually down 32% of the week. That's the worst performer in the Russell 1000 on this.
And we're going to talk about that later too.
Are we?
Yeah.
Oh, okay, good.
Yeah, we're going to talk about the bonds.
Okay, I got to start coming to these meetings. Let's take a look here at what's going on in the yield space, because it was interesting moves here. The 2-year yield started to float back higher as a lot of people now starting to reassess that Fed pivot that the Fed never said they were going to pivot. But 7 basis points here on the day and 19 basis points on a weekly basis. What I think is interesting, though, Scarlett, is that big move in the 2-year. Nothing in the 10-year, 3.8195. That's basically where we were last Friday. Similar story on the 20, similar story on the 30. So most of that move now coming at the short end of the curve, and that means deeper inversion that we're seeing on that 2s, 10s, and some of the other key metrics here. Something to keep an eye on. Right. The big question is, what is the bond market pricing in? Is it just the Fed rates, or is it something more when it comes to recession in the economy?
Why are we so obsessed with pivot? Why not just pause? Why don't we take it one step at a time?
I don't know. You know, they parse it. Do you think they just have like a thesaurus that they put out on the table there at the Eccles building, and they just flip through it and try and figure out the best?
But they never said pivot, right?
Transitory is crossed off now. Soft landing is crossed off. They're not allowed to use
Pivot is
those.
like a big circle with an X through it.
No way. Pivot. We shouldn't even be talking about a pivot. We have no idea how long they're going to keep rates high.
But that's basically what they've given us for a while. I feel like they've been kind of spoon feeding it to us.
Well, I mean, speaking of all this, guys, I mean, just to kind of push ahead next week, we do get Fed minutes, believe it or not, on Wednesday. So we'll get maybe a little more insight. I don't know. So you never know with these Fed minutes.
Wait, do you
Sometimes
think
it's
we're going to see
nothing.
the phrase
The turkey will be in the oven then. Okay?
Yeah.
Do you think the phrase sufficiently restrictive level for some time will be in the Fed minutes?
I do.
I think so. It seems to be a common refrain here, but we get that. You do get some economic data. I think some home sales data.
Some earnings.
Earnings as well. So there is still a better read on the economic picture. And then, of course, there's all the focus on Black Friday and what that means for consumer spending, Carol. Do you go out on Black Friday?
Nope. I do so much online. No, I stay away. I think it's too crazy. But you're absolutely right, right? Consumers, we say it a million times, so important to our economy, whether or not they're going to be out in full force. We're all going to be parsing over the activity on Friday and through the weekend. And into Black Monday, which is now Black Tuesday, which is now
Cyber Monday.
Cyber Monday.
Carol.
Sorry.
Does that matter, though? I mean, everybody's already started their sales already. I mean,
I
what does
already
it matter?
bought Christmas stuff.
Oh, what did
you get us? Candles. I think that's what we discussed yesterday.
Bath and Beyond fizzy balls.
You know, in all seriousness, I think of all the data we get next week, to me, the most important will be the real-time credit card data around what happens on Friday. And then Adobe's also really great with what's going on online with Cyber Monday. And Cyber Monday really starts, you know, on Thursday night at this point. So getting an understanding of what consumers are doing and the way prices are falling, or really if there is, you know, we're seeing that pressure kind of taken off in some of these, you know, we're seeing inventories move higher in some areas too.
I'm excited to see what company comes out with bad news, because next week would be the time to bury it, to release it at Wednesday at 4 p.m. when no one's paying any attention.
No, I'll be working. I'll be paying attention.
Well, okay, Romaine will get you covered
I'm
for
working
that.
too, Romaine, so we can
Thank you,
commiserate
Carol.
together.
Yeah, Tim,
Tim and I are going to be off.
Somebody's got to support the network. I'm just going to say. No, but you're going to get a name like Deere. I feel like this is always an interesting team in terms of agricultural, whether companies are committing to pay thousands of dollars for some of their equipment. That says a lot about the economy.
And Deere's been pretty resilient too. I mean, obviously we know they have a big link to China and the home building or construction building over there, as well as agriculture. Be interesting to see how that holds up.
Yep.
All right, I'm thinking about Turkey already.
Okay, well, have a good
it's
wherever
Friday.
you're going. I don't know. Are you biking to wherever you're going?
Will not be doing any biking. Too cold.
Too cold.
Yeah, headed to Cincinnati. Looking forward to it.
Cincinnati?
Yeah.
All right.
My wife's family
We're
is.
done. We're done. I'm ready for the weekend. All right, it's pizza time.
That's better, yeah.
Bye, guys.
All right, have a good weekend, guys. That is
joke about
a
Cincinnati.
wrap.
We have to go?
That is a wrap for our cross-platform coverage. Radio, TV, YouTube, also on Bloomberg Quick Take. Have a good weekend. We will see the gang, same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So you are listening and watching Bloomberg Business Week. Carol Masser along with Tim Stenovic. You know, I was thinking about what we were talking about with Scarlett and Romaine. And the one thing, too, that Aaron Kennan said is, you know, what do margins do in a slower growth world, especially, as he said, higher wages. It's a sticky component when it comes to inflation, right? You can't give somebody a raise and then take it away right away. And it sticks around in something like the CPI or what have you. So will that impact company margins? Will that start to play out in earnings? And especially if the economy slows down, that's when you start to have some problems and you relook at valuations.
Look no further than job openings numbers, right?
Yeah.
There's still so many jobs available
Look at
to people who are
Emeril
looking.
Lagasse saying, where are the workers?
Yeah, that's a good point. Hey, I wanted to get these numbers in here, Carol,
Sure,
because
please.
the Dow flat on the week, the S&P 500 down 0.7% on the week, the NASDAQ down 1.6% on the week.
And that was after that surge the week before, right? That was really outstanding, certainly if you were a bull in this marketplace. All right, back to World and National News. Back to Denise Pellegrini. She is in our newsroom. Hey, Denise.
Hey, Carol, thank you. Attorney General Merrick Garland announcing he is appointing a prosecutor, Special Prosecutor Jack Smith, special counsel to oversee Justice Department investigations involving former President Trump. Here's Garland.
As special counsel, he will exercise independent prosecutorial judgment to decide whether charges should be brought.
And those investigations will include the transfer of power up to and including January 6th and also the classified documents found at Trump's Mar-a-Lago. There's a tentative labor agreement in place for railroad workers, but if the union votes no, could be some drama this weekend. Congress might have to step in. More from Bloomberg's Amy Morris.
The main grievance, never knowing when you'll have time off. The tentative agreement addresses that, forcing railroads to address scheduling rules. But workers say the pact that Labor Secretary Marty Walsh helped negotiate in September doesn't go far enough, and a no vote by the two largest rail unions on Sunday could lead to a crippling walkout in early December. In addition to schedules, the 115,000 employees are upset about working shorthanded during the pandemic, frozen wages, and increased health costs. In Washington, I'm Amy Morris, Bloomberg Radio.
Thank you, Amy. Upstate New York buried in snow, more than a foot in Erie County already. And County Exec Mark Polakar says a lot more is coming before the end of the weekend.
In some areas, it was possible that 24 inches to 30 inches of additional snow will have fallen during that period. The vast majority of it in the same areas that are getting hammered right now and have been hammered for the last few days.
And Polakars and the mayor of Buffalo telling people just stay home this weekend. Don't even bother to go out until Monday. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Denise Pellegrini.
All right, Denise, thank you so much. Carol Masser, Tim Stenovic here in our Bloomberg Interactive Brokers studio. Carvana, we've been talking about this company a lot.
Yeah, it got hit today after the company said that it will eliminate about 1,500 jobs. It's not just the growing list of layoffs that it adds to when you see across corporate America, right? The layoffs that we're starting to get from Amazon this week. Last week it was Meta Platforms. But it's also specific to the company because we see a slowdown in the used car market. And it's a good portion of the company, Carol. 8% of the company's workforce, that's according to a spokesperson today.
I don't understand. I mean, this stock is down. You said, you guys, we were just talking about it.
98%.
Right. Year to date.
No, from its highs.
Okay.
Yeah, from its highs last
96% year to date.
Mm-hmm.
So almost 40% of the float is shorted. So people are anticipating, I don't know how much further it can go down. But, what happened? Is that a play on the economy?
Well,
Post-pandemic? What is that?
I can't answer that question for you, but I can tell you if you look at the longer term chart, what you can see is it's back to levels that it was pre-pandemic.
So this is where it was.
Yeah.
So, I mean, what are they selling? I guess this is what we need to know. We know prices of used vehicles slid in October for the 5th straight month. According to the Manheim Used Vehicle Value Index, that shift has been a substantial drag on Carvana's business, and as word Wall Street analyst with Morgan Stanley's Adam Jonas saying recently that the stock could be worth as little as $1.
Oh, it's really, really wild to see. I mean, that was a few weeks ago.
Yeah.
That wasn't what kicked us off because the company's been under pressure for quite a bit of time. As you mentioned, used car prices for October fell.
Right.
Carvana, though, this month cited the weakening used car market and the broader economy when its quarterly earnings missed analyst estimates. The company, though, a latest in the series of firms across industries to trim its ranks as conditions deteriorate. FedEx said earlier this week it's going to furlough some workers. But I think this is different because this is a company that's has been under way more pressure than those other companies that have done layoffs.
And it says to me that there's a lot more new cars out there. So if that's what you want, you can get it, despite the chip shortage stories we've heard. So changing dynamics, certainly. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Light volume. Wall Street wraps up a losing week. It's on to the weekend with the S&P today higher by 18 points, up 0.5%. For the week, the S&P was down 0.7%. The Dow down 0.01%. We'll call that flat on the week, while NASDAQ this week lower by 1.6%. So stocks ended with a gain today of 0.5% after shrugging off Federal Reserve warnings that there was more policy tightening to come. Oil futures fell on signs that the market is currently awash in supply. West Texas Intermediate crude ending the week $80.20, down 1.8%. Barrel of Brent $87.82, down today by 2.2%. Spot gold down $10 the ounce, lower by 0.6%. An ounce of the precious metal now at $17.49. Bitcoin today down 0.3%. Right now at 16,637. 10-year yield 3.82%. The 2-year 4.52%. Again, the Dow, the S&P, NASDAQ all higher. NASDAQ eking out a 1-point gain. The Dow today up 199 points, up 0.6%. S&P up 18, up by 0.5. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It's been a big news this week from the auto sector. I'm thinking about GM, which said its EV program will be profitable by 2025. So that's going on. And we wanted to do a little bit of digging into the auto industry. And then we talked about Carvana, like really having a tough time.
Yeah, it's really a tale of two different types of companies.
Absolutely.
I mean, a company like Advanced Auto Parts, it was one of the worst decliners in the S&P 500 this week. It reported results that underwhelmed investors.
All right, so let's get to it with our next guest. David Mignon is CEO of CarParts.com. It's a publicly held small cap, about $289 million in market cap. Stock is off more than 50% year to date, but up more than about 30% since November 9th. That's when the company reported earnings after the close. So let's get into it. David joining us via Zoom from Torrance, California. David, nice to have you here. How are you?
I'm very good. Hi, Carol.
Well, tell us a little bit about the environment, because depending on where you are in kind of the auto world, you might have a good story, you might have a bad story. So what's your story?
We have a very good story, I'll tell you. We've been around for 25 years, and we just announced our 11th consecutive quarter of double-digit year-over-year growth. We just reported $164 million of sales. Our EBITDA is up 174%. So as a company, we're doing great.
What's the environment look like? Because it is tough for some companies right now to navigate what's going on when it comes to supply chains, when it comes to used car prices coming down. David, what are you seeing?
Listen, I'm seeing the environment changing around me every day. You guys see it too. The consumer is getting pinched, right? At the gas pump, at the grocery store, with interest rates. So, it's an opportunity for companies like us to double down on efficiencies and double down on continuous improvement and figuring out a way how to pass on savings to the customers and give them a reason to shop with us.
Well, so when you are doubling down and thinking about where to conserve or not, we talked about Carvana planning to lay off about 8% of its staff. That was the headline that we had today. Are you guys bracing, David, in your story, for a slowdown? Are you bracing for a recession, and might layoffs be a part of that?
I think the environment is definitely changing, and it's a good time to double down on, free cash flow, staying debt-free, positive unit economics, and really go back to the fundamentals of serving the customer needs. So for us, it's been a laser focus on number one, customer experience, and number two, being fiscally conservative. So we've always been very fiscally conservative, especially over the last 3 years. We're free cash flow positive, we're virtually debt-free, but as we get into 2023, which might be a recession, it's an opportunity to really double down on that.
All right, but as you double down, as you said, customers come first. You need people to make sure customers come first. But if you are feeling the pressure, are all bets off, in meaning that if you need to cut costs and if that means workers, that could happen?
Yeah, I don't think we're in that position. I think we've been in a good spot for the last 3 years. We've been very disciplined about, increasing headcount. So right now we're in a good position. And we also have a ton of opportunities operationally to find efficiencies, not only on the marketing side, on the technology side, using data science, using continuous improvement. So I'd say, for us at CarParts.com, we're in a good spot.
You guys offer hundreds of thousands of SKUs. Give us a percentage, though, in the last couple of years, in this supply chain crunch, as prices have gone up, how much your costs have gone up on these parts? How much have you had to raise prices for the consumer?
Yeah, definitely. We've seen some pressure on the supply chain, not only in the cost of raw materials, but also inbound transportation and outbound transportation. So it's been across the board, not unlike the other traditional retailers or brick and mortar retailers. It's been in the double digits. Now, obviously, we have, what we think is a competitive advantage. We have a vertically integrated supply chain, and we always try to pass on whatever savings we can get to the customer. But to your point, yes, the last couple of years have been tough for the customer, and it's been, double digits for sure.
Double digits? Like, are we talking 10%, 20%, 40%?
Somewhere between 10 and 20 over the last couple of years.
So we could say teens.
Yeah.
We like to
I got there.
We like to
Carol.
zero in there. We do. You're being a good player, David. Hey, what I am, as Tim mentioned, lots of SKUs, lots of manufacturing. How has the geopolitical instabilities, the trade pushback, the pushbacks against globalization, how is that impacting you about where you want to manufacture everything?
Yeah, that's a very good question, and it's something that we've been thinking about for a very long time. We source parts globally. Now, obviously, there is a high concentration in Asia, and so we've been looking to diversify our supply chain. And over the last couple of years, we added some supply out of South America, out of Europe, and I think long term, as the business continues to grow, we're always going to be sourcing parts from Asia, but there's opportunities in other places. So for us, we've actually made some investments to build a global sourcing team. Now, the main focus is quality, right? We're always looking for quality parts,
right?
But obviously, the global geopolitical environment comes into play for sure.
David, when you say Asia, do you mean China manufacturing in particular?
Actually, a lot of what we source is from Taiwan.
Okay.
So we carry about 80,000 SKUs, individual SKUs in our supply chain, and a lot of those come from Taiwan, which historically has been a very good partnership for us. Very stable.
What about Mexico?
In Mexico, we're actually starting to source from Mexico. There's been a lot of improvements and a lot of investments to be made in manufacturing in Mexico. What it allows to do is, shorter lead times, so it's faster and it makes our inventory more productive. So Mexico is for sure a big opportunity.
All right, we got to run. Hey, listen, so good to check in with you on this Friday. Have a good holiday next week, and look forward to getting another update, hopefully soon down the road. David, be well. David Benron, he is CEO of CarParts.com and joining us via Zoom from Torrance, California.
I like that.
Yeah, that was interesting, right? And it does, companies in similar spaces, not everybody's doing the same thing.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening and watching Bloomberg Business Week on this Friday. What a week, what a day. We've got a great guest coming up. We're going to talk about a lot of stuff in terms of the advertising market. We're going to talk about the media space, social media space, a lot to get to.
Maybe we won't talk about FTX.
I can't promise you that.
Can't promise.
Because I don't know.
Well, let's get on over to Charlie Pellet.
Buying ads with crypto in the
we got
future?
a lot
Could it
going on in the
happen?
market.
And I'm still waiting to hear who the guest is coming up right here.
This is called a deep tease, Charlie, okay?
Exactly. Well, you got me hooked without a doubt. Here's what's going on. The Dow, the S&P, NASDAQ, they're all higher today. The Dow up 199 points as we head into the weekend here, up by about 0.6%. The S&P up 18, higher by 0.5%. NASDAQ up barely, I'll go decimal on you, 0.01%. We can call that unchanged with NASDAQ up today by 1 point. Stocks higher as investors shrugged off Federal Reserve policymakers' warnings that interest rates still have to head higher. Aaron Kennan is the CEO at Clear Harbor Asset Management, and he was our guest today right here on Bloomberg Business Week.
Yeah, the market's currently pricing in another 100 basis points. They've already done 400. And so we're in the latter innings of a tightening cycle, and we're starting to see incipient levels of deceleration on inflation. And so, I think that bodes well for the Fed to get out of our way for at least the back half of 2023.
And right now we've got the 10-year yielding 3.82%, the 2-year 4.52%, spot gold 17.49 the ounce, while West Texas Intermediate crude down 1.7%, 80.23 a barrel. The Justice Department, according to sources, is probing Live Nation Entertainment and its Ticketmaster unit over whether the entertainment giant is abusing its power over the live music industry. Today, shares of the Live Nation company down by 7.9%. And FedEx has diffused a threat by its delivery contractors to walk off the job on Black Friday in protest of dwindling profits as a trade group representing disgruntled logistics company owners disbands. Today we got FedEx shares up by 1.9%. I'm Charlie Pellet. Let's name the guest, and that's a Bloomberg Business Flash.
It's a new game show right here on Bloomberg Business Week. All right, our next guest is an entrepreneur, co-founder of a couple of companies, including the one he runs now, former president of Asia at Electronic Arts. He was there for 7 years. Before that, president of Asia Pacific at Walt Disney International. It has been a few years, but really great to have back with us.
Yeah, we got John Neerman with us right now. He's with us in the Bloomberg Interactive Brokers studio. As you mentioned, Carol, the co-founder and CEO of Loop Media, plus done a bunch of other really cool stuff in his career. John, we're going to dive into your company in a minute, and we got a lot of time with you this afternoon, so we're excited to do this. But I want to go to the broader advertising market right now. We do hear about concern from social media companies, for example. I know your focus is out of home.
Yep.
But we're out of home a lot when we're using social media. So just give us your assessment of where the market is right now as companies are tightening their belts and they're pulling back on their ad spending.
It's all doom and gloom, right? It's just falling apart. It's tanking. If you look at, if you hear from Snap, now I don't agree with that.
You're saying that's what you're
I'm
hearing.
saying that's what you hear.
I was like, John, this is like...
I'm not coming out strong. No, I'm coming out saying that's not entirely accurate. I think certain segments, if you look at advertising across the board, you got the traditional advertising, linear TV, outdoor, etc. Now, 55% of the people are doing digital advertising. So yes, social media in that area, which has grown robustly, has taken a hit. But areas like connected television, your Roku's of the world, your Plutos, etc., they're growing. Digital out of home are also growing. Those are the two areas we play in. So I don't agree with this kind of blanket statement of it's just all bad.
But would you agree with the blanket statement that companies are tightening their belts, and when companies do tighten their belts, one of the first things to go is marketing money?
I would agree with that, yes, but I also think they refocus it. So if people are going out again, as we know, unlike a couple of years ago, even the past year, people are going out. It's a great captive audience. They're out for a good time. They're having a good time. So targeting groups like that out of home, as opposed to just your mobile phone all the time, is something that people are expanding into.
How do you do that?
So like Loop Media, we have a platform that's advertising supported. We're in any public venue as small as a pub to as large as a university campus. So whether you're a dry cleaner, a tattoo parlor, a CDB store, you name it, they have screens. So we create a network basically out of home. Previously, these were all kind of disconnected.
Right.
You know, think about where homes were 10 years ago. It was cable and satellite. That's still where businesses are. They don't really have a streaming option, and that's what we're bringing to them. You don't go to a restaurant and watch a movie. And basically all streaming services are movies or TV series.
If you're a 7-year-old, you do.
Yes, you do, right.
Your parents give you an iPad and they say, watch this movie while we have a nice peaceful dinner.
Yeah, exactly. Or you go to a sports bar and they're constantly playing Caddyshack the whole time. There's nothing wrong with
So
that.
wait, so help me understand. So exactly what you're doing. So you're going into spaces that maybe typically did not have advertising before.
Correct. So previously, in our world, we're not really about subscribers. That's a consumer's, how many subscribers you have.
Right.
For us, it's how many locations are you in. So we provide that as ad-supported for free. Coming out of the pandemic, people had all these costs to worry about, labor, food, etc. The last thing they're worried about is spending money on a TV screen, but they didn't have that free option before. So in order to get that free content and digital signage, you need advertising to support it, obviously. So people are moving part of their media mix into this digital out-of-home space, which you'll hear more and more of.
What's the growth that you've seen? Give me, where were you pre-pandemic versus pre-pandemic? Where are you today?
We were about $3 million in acquired revenue. We were basically a startup. You know, we had bought a small company that provided music videos to out-of-home.
Right.
And this past year, we finished $5 million. We haven't released our fiscal, however, the analyst estimate is around $30 million for us to go.
That's a big gap.
To go from 5 to 30, you know, over
Is that
this past
realistic?
year. Yeah. So if you kind of look at that, that's the type of growth that you're looking at.
Which venues in particular are providing the biggest momentum for you guys? You mentioned restaurants. So you're telling me if I go to Danielle?
You could go to Margaritaville right down here at Times Square.
So not Danielle.
Hey, we talked to Jimmy Buffett last year.
Did you?
When they opened that.
So if I go to Margaritaville, where am I going to see the screen? At the bar?
You're going to see it at the bar. You're going to see it in common areas. You're going to see it in the lobby.
Okay.
You know, we're also in 400,000 hotel rooms.
Okay.
So, you know, we provide largely about 40% of our business are bars and restaurants. The rest are just kind of other retail.
John, 40 seconds right now, then we're going to come back with you. Tracking, ROI. How do you tell clients what they get, what their return is?
So for them, it's really a couple things. One, it's about cost savings. So what used to cost them, they can actually earn a little bit of money because we do provide a rewards program. So when you use our service, you keep the screens on, you have a chance to earn some cash. So that's a great thing for their balance sheet. The second thing is really just the opportunity for them to engage the customers. And you know, when people are engaged, they stay longer and they spend more. So there are quite a few studies that actually show when that entertainment is good in-house, people are sticking around.
So you're putting Wordle on there?
No Wordle yet, but we do have a trivia channel.
It works. I'm like addicted to these games.
It's good stuff. I love it.
We're going to come back with John Neerman. He's co-founder, chief executive officer of Loop Media, joining us here in our Interactive Brokers studio.
Denise Pellegrini is standing by right now. She's got an update on world and national news in the Bloomberg newsroom. Hey, Denise.
There. Thank you, Tim. And Attorney General Merrick Garland appointing a special counsel, as we've been reporting, to oversee Justice Department investigations involving former President Trump. Now, this will include the transfer of power up to and including January 6th insurrection and the investigation into the presence of those classified documents at Mar-a-Lago. And Garland says it all underscores, and the appointing of the special counsel underscores, the department's commitment to independence and accountability in these very sensitive issues.
It also allows prosecutors and agents to continue their work expeditiously and to make decisions indisputably guided only by the facts and the law.
And Garland says Jack Smith will be heading home from The Hague, where he's been working on war crimes. North Korea confirming it conducted an intercontinental ballistic missile test yesterday. Leader Kim Jong-un saying the country is strengthening its nuclear deterrence. Vice President Kamala Harris denouncing North Korea's latest weapons test.
We strongly condemn these actions, and we again call for North Korea to stop further unlawful destabilizing acts.
And Harris speaking from Thailand alongside world leaders at the Asia-Pacific Economic Cooperation Summit. And the Justice Department, as we've been talking about, probing Live Nation Entertainment and its Ticketmaster unit over whether the entertainment giant is abusing its power over the live music industry. That is according to sources. Now, these probes come amid the whole debacle with the Taylor Swift thing. She says Ticketmaster let her down after making promises. It's worth noting this antitrust investigation began earlier this year, before the Swift ticketing fiasco. Global News, 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Carol Master along with Tim Stanovic live on Bloomberg Business Week. We're going to get back to John Neerman of Loop Media, of Loop Media in just a moment. In the meantime, we're going to talk about our weekend show.
Yeah, in our weekend show, we got to look at the Bloomberg Pursuit's Guide to Holiday Entertaining, Carol. In this excerpt, Bloomberg Pursuit's
timing,
editor Chris Rouser. Yeah, really good timing. We're also joined by Bloomberg food editor Kate Crater. Not Cake Crater.
Well, you could call her Cake Crater after you hear this.
Because she talked about some mouth-watering delights in the magazine.
A lot of people during the pandemic started baking cakes. They started baking bread. And then a lot of the rest of us looked at those people and said, man, I wish I had some bread and some cake, but I am sure not baking them.
I was one of them.
So was I. And we started having cakes delivered from Goldbelly. And that has continued on even as the pandemic has lightened. And every year we have a holiday entertaining section in Bloomberg Pursuits. It's one of our favorite sections. Kate usually takes charge. And we really wanted to do cakes this year. We felt like everybody needed a slice of cake. So Kate picked out some of the best new and regional cakes to really highlight across the U.S.
I want to know, Kate, how the heck do you always, I'm always amazed because there's so much stuff out there, how you whittle it down.
Well, you know what? It's so much work and research, Carol. It's
a lot of eating.
A lot of work.
Hold on, I can't tell if you're joking here. Like it's so hard to just try all these cakes and order these cakes, but it is hard, right?
You know, at some point, you can kind of hit cake overload, but it takes a lot of research for that to happen. But it's just cakes are so great, like they look wonderful, and this is around this holiday time, it's usually pie season, and a lot of people will talk about pies, but people usually make those pies, and I'm like you, I will eat cakes all day, but I don't really want to make them, and same with pies, so it's great to have a cake because it shows up. Like I think a pie is just sort of sitting on the table, but a cake stands tall. It towers over everything else. So in the pie versus cake debate, cake will always win.
For more, catch our Business Week weekend show tomorrow at 8 a.m. on radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Light volume today, an up day for the Dow, the S&P, and NASDAQ. For the week, however, the S&P 500 index was down 0.7% today. The S&P up 18 points, a gain there of 0.5%. Dow Industrials up 199, higher by 0.6%. NASDAQ just about flat on the day, eking out a gain of 1 point. 10-year yield 3.82%, with a 2-year yielding 4.52%. Spot gold 17.50 the ounce, down 0.6%. Bitcoin today down 0.2%, 16,641. While West Texas Intermediate crude oil was down 1.9%, $80.09 a barrel on WTI. Again, recapping, turned out to be an up day for the Dow, the S&P, and NASDAQ losing week. S&P today up by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, I want to get back to our conversation with John Neerman. He's co-founder and chief executive officer of Loop Media. As we said, they're a multi-channel streaming platform. Is that the right way to describe you guys? It's in your press releases, but does that really do it?
Yes, it does. We kind of move towards digital out-of-home video streaming company. Because as you've evolved in industries, you like that? DOOH.
It's such corporate.
It is.
Say it, Carol.
So speak.
Yeah, say it.
So when you if you're at a bar with your best friend, Joe or Jane, and they're saying, "What the heck do you do?"
Yeah. So you stream videos. You're a video streaming company into public spaces. So bars,
So any company can do it.
Any company can do it. They just need to find us. We get them a Loop player. They plug in the Loop player. Previously, you'd have these giant AV racks. You go to. We have.
You're dating yourself, but go ahead.
I know, thank you.
You're welcome.
But even I go to a Yard House and you can a big Dell computer there, and they're clunky and horrible and expensive.
Right.
And now you just plug and play like you do at home.
Is what you plug in a hard drive or a stored memory device, or does it give wireless access?
It's
to
a little
network.
It's an Android player. You just plug it in the back. It's like the size of an Apple TV.
Okay.
So kind of a 3x3 thing.
Does it connect to a network, or does it have a hard drive on it?
Wi-Fi. You can also do Ethernet, and it does cache content, because in case Wi-Fi goes down, you don't want to be left without content.
I want to go back to the question that I had before, because John, with all due respect, you didn't really answer it, but maybe I asked it in a bad way. Okay.
I snorted.
Oh, great! Now you're gonna bring it back.
The content that you play in these out-of-home spaces, it's supported by advertisers.
Correct.
What I want to know is how advertisers who work with you know they're getting eyeballs, know they're getting a return on their investment that they're making.
So currently, they basically put advertising in there to have the opportunity to be exposed to multiple people in the room. Think of it this way. When you're at home watching your movie, it's you one-on-one. So advertisers paying for that one-on-one. When you're out of home, it's a multiplier. You could have 15 people within the range of that. Now, we're working with ComScore to try to get some measurement in there. There's also third parties like Geopath that measure people that are in that can basically through Wi-Fi can tell how many mobile phones are in the room. Okay. So you get a good indicator of how many people are in that room at any one time.
So you pay, it's sort of judged the way that maybe someone would, out of home, like a billboard, right?
Yeah.
So a billboard costs a certain amount of money based on where it is, who drives by it, and how many people drive by it.
That's right.
So that's how we have to think of this product too.
It's the same thing as, the CPMs, which you would do pay online. It's
with
the
a
same
banner
thing.
ad.
Right.
Cost per thousand is what that stands for.
Thank you. Exactly. You're right.
This is fun to watch. It's like a tennis match. Go ahead.
Am I answering it now?
Oh, yeah, you're getting it all in.
But it's a great question, because this is new. I mean, it's odd as it sounds. Everybody's been focused on consumer streaming.
Right.
It's Roku, it's Pluto, it's Disney Plus, it's everyone there. But out of home, those things don't play. They don't work. The content isn't right. Their licensing isn't there. So we've kind of quietly gone about finding that world of tens of millions of screens, beautiful screens out there with tons of eyeballs, providing content that works, music videos. We lead basically all 50 states national music video promotions. So
That's amazing.
We're the biggest.
MTV, now it's you guys.
Yeah, that's right. All right, bring me my loop or whatever. So I gotta a
I want my
new
MTV.
slogan. Yeah, that's it. So loop me in. You just keep going.
Loop with it on the fly. I love it.
You supply the hardware too?
We do. So we can do it with our own loop player, but we also have a partner network. So, for example, we're in about 17,000 convenience store point of sale systems.
Right.
Truly last mile advertising. Think you're in line. You got the little thing at the end that says itemizes your receipt. Boom, there's a Snickers commercial right there. Oh, Snickers right here, impulse buy. So it's really that last opportunity for the advertiser to grab that consumer when they're actually out making a purchase.
So what does an ad spot cost?
That CPMs vary. You know, they're kind of in between 5 to 15 depending on the day.
Dollars?
Yes.
Okay.
But then a multiplier.
Okay.
So what you could do without a home, if there's 10 people in there, you could put that 10 times multiplier and the advertiser would pay for that.
It seems like your competitive advantage is relationships that you build up with the places where the screens are.
Yes.
What about the technology? Is there any technology that you have that a competitor couldn't come in with?
It's an Android player, so it's proprietary technology for us. We, make it on our own, and it's got, everything you need in terms of putting in your optical and your sound and all that good stuff. So of course, a competitor could come in and do it. It's just like you could have other type of hardware. However, it's really about creating it's harder to get the distribution.
Yeah.
So anybody can actually make a piece of hardware, but ours, by the way, is developed by a guy named Liam McCallum. I'm going to give him a plug. He was one of the heads of digital electronic arts that built up EA's online gaming platform.
Right.
So this guy has built a very special, robust platform for us, which allows us to run that many 160 channels in all these locations. So it really is about getting distribution, Tim. That's the main thing of how you really grow that business.
What's your biggest cost?
The biggest cost is really marketing.
Okay.
And that's not that big, not even for consumer.
So customer
for us,
acquisition?
Customer acquisition, but we have a pretty quick payback, so we're not really worried about that. We've put all of our money in development. We're not putting any sort of giant working capital in development or anything like that. It really is about getting the word out and then having people understand this exists.
So it sounds like it's difficult.
It's difficult for people just to know about us.
Yeah.
Right?
Look at how many questions we've peppered you with.
No, I love it. I love it.
No, but I'm saying, when you're making I'm just wondering, when you're making the pitch, are people like, oh, yeah, I totally get this? Or,
usually it's too good to be true. So what's the catch? It's free. You're giving me all this content. You're giving me digital signage. I have to pay hundreds, if not thousands, depending on the size, if they're an enterprise or if they're a mom and pop.
Right.
But then the best results are the testimonials, the people that actually will go online and social and tell their friends. And then we get a franchise like McDonald's, and then another franchise will come in. So it really is proving yourself.
Individual McDonald's franchise,
yes.
Not McDonald's as an entire
And you just want the eyeballs.
We want the eyeballs.
That's it, right? Yeah.
So we want the eyeballs.
What does your sales force look like?
We've got a terrific chief revenue officer called Bob Gruters. Yeah, and
Bob,
he came
I hope
from,
you're listening.
He came from Facebook. He has 30 years of advertising experience.
But is your sales force picking up the phone and cold calling individual restaurant franchisees with a number of restaurants to try to get screens in their stores?
And saying...
So in-house, we have an enterprise sales team.
Okay.
We have an affiliate team that we basically work with. They're basically literally thousands of boots on the ground that are roaming around. And then we have a college marketing program because colleges are a big target. All the bars and restaurants around campus. So you have that sports content and all. So we're a pretty small company. We have about 66 people. We're not about we've got 300 people. Aren't we amazing? We want to keep that ideally a small, tight team and utilize people that are already out there.
This is like having to prep for an IPO roadshow or something.
I love it.
Your IR team.
They're already public. They don't
your
have
IR
to.
I know they are, but your IR team didn't say, hey, John, we have an interview. Actually, this was a prep. Very interesting. Come back, keep us posted.
I'd love to. Thank you for having me.
As things continue, because it's a very interesting part of the advertising world. Really cool. John Neerman, have a great holiday. And thanks for coming in. Co-founder, Chief Executive Officer of Loop Media here in studio. Watch our weekend show, 8 a.m. Bloomberg Radio. Catch our podcast, catch IRL Crypto.
Tonight on Bloomberg Television.
And have a good and safe weekend, everybody. This is Bloomberg.